going meeting by meeting. We're asking ourselves whether we've achieved a stance of policy that is sufficiently restrictive.
Clearly what the market saw was a preference for the worry of tightening financial conditions. We're at sufficiently restrictive. We can be done.
If I were recommending or talking to Jay Powell, I would recommend that he leave the door open.
Our concern is sort of around May and June, where is the Fed going to be?
It's unlikely that 1/4 point move is just going to be sufficient to do the job. So I think it's either zero or multiple rate hikes.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene. Bloomberg Surveillance the morning after the Fed meeting, the morning before the jobs report. Lots going on this week. Luke Cow is going to start us off strong in a moment. Jonathan Ferro still on assignment. Bramo, finally a day off for the Bramo. She's recovering from Halloween, the offspring. Joining us now by special invitation. I'm going to tear up here. It's just been weeks. Joining us this morning, Scarlett Fu. She hasn't been up this early in, I think, like 6 years. The star of afternoon TV. How'd that 4 a.m. feel?
Ask me in 2 hours.
Yes, in 2 hours. Scarlett Fu with us today as we consider the earnings season, a little bit out here on Thursday, but really we've got to consider what you witnessed yesterday, which is without question a melt up in the market. It continues this morning. We'll get to that in a moment. You know, I looked, Scarlett, at all that came out yesterday, and there was a little bit of a nuance early in the Powell Love Fest, where he said it's not solid. He changed the language and said it's strong. And the shift from a solid economy to a strong economy really belies the worry economists have about a slowdown in this present quarter.
Yeah, and that's something that's looming over the Federal Reserve as they move forward. What I also learned from Powell is we have this new definition called lumpy. Did you know progress in inflation will be lumpy?
It's lumpy.
Yeah. What does that mean? What does that look like?
Well, we're going to dive into that. We got some nice compare and contrast for you, particularly over a bag of groceries. We'll get to that in a moment. Let me do the data check right now and just dive into that because it's really quite something. We continue to lift this morning. Futures up 21, up a solid 0.5%. Put a bow on that near 4,300. A Dow up 100 points. But the NASDAQ is a story. Tech on Apple this afternoon, a huge report from the people of Cupertino, up 0.7% on the NASDAQ 100. BitDog over 35,000. Catherine Greifeld said, Tom, you have to quote BitDog moving that fast. 4.95% on the 2-year. We're in on the 10-year yield. I look at the screen and I can hardly understand the numbers. We've moved so much in 48 hours. 30-year bond well under 5%, 4.90%. A little bit of disinversion here. Thank you, Priya Misra, for joining yesterday. And the real yield to me, Scarlett, is the heart of the matter. We went from that 250, OMG, the world's coming to an end, and it comes down to 2.30%. That's a demonstrative move in the inflation-adjusted yield.
I can't keep track of the moves in the 10-year yield. I mean, we were at 5% last week, and we had this massive 17 basis point move yesterday. If the bond market is doing some of the Fed's work for it, what does it mean when we go up and go down so quickly? Can you rely on this market to do any work?
I don't think you can rely on the market. What I looked at yesterday, and this is a fancy pro study, but this is not the first, the second, the third, the fourth, the fifth time we've had a, wow, it's all over, it's done, which is the phrase the economists are using this morning. The rate rises are done, the inflation's done. This is 5 times we've been through this exercise. Will it stick this time? And to me, that's the heart of the matter into the jobs report tomorrow.
Into the jobs report tomorrow, which again will likely show that the labor market is robust. We also get the Bank of England later this morning in about 2 hours. Have you heard of the term Table Mountain?
No, I don't know that. Table Mountain stuff. That Ellen Ruskin knows that. You know.
Well, it's apparently another way of saying terminal rate. Rates have peaked, but I mean, I would just say plateau. But
that's where we are with the Bank of England. We're going to dive into that. I saw Governor Bailey in Marrakesh at the IMF meetings. He was not declaring victory, but certainly a different calculus there, and certainly a different calculus in Germany and all of Europe, where you've got some real economic slowdown. Before we get to Luke Coward, we've got to talk about this, Scarlett. I have never seen a predictive deceleration in the American economy like what's predicted right now. Morgan Stanley, Seth Carpenter stopped the show yesterday to go from 4.x% boom economy down to Ellen Zentner, under 1%, 0.9% economic growth for this present Q4.
It's grinding to a halt.
It's grinding to a halt. And there's some inventory numbers in there and that. But I really wonder how many of our viewers and listeners really understand how they're modeling a slowdown right now. To me, it's extraordinary.
I think if you ask the average consumer, they didn't actually feel like the economy grew that much in the third quarter. Their sense of their confidence and their sense of the growth was definitely a lot more, let's just call it restrained. And I think going forward, maybe in the fourth quarter, if we're looking at sub 1%, it's not going to be that, people are not going to feel that bad, but the numbers show a dramatic deceleration.
To make Luke Kawa feel good. I mean, Luke Kawa is hockey royalty from back a ways, collegiate hockey at royalty. And the fam, we got to get a sports update from Fu. We used to do this all the time when we were together day after day. Rangers start strong.
They start very strong. And we're not
the
talking
Texas
about,
Rangers.
I was going to say the New York Rangers. It's early, but they're first in their division, so yay. And they have a 5-game winning streak.
How does Lundqvist look?
Lundqvist was playing in a charity game, or he's supposed to play in a charity game. I follow him on Instagram.
Okay, there's your hockey talk for the morning with Scarlett Fu. We're thrilled she's with us here through the 3 hours. Again, futures up 21. With UBS Asset Management, Luke Kawa joins us now, asset allocation strategist. Do you have to asset allocate, Luke, off what you witnessed yesterday from Chairman Powell? Do you have to change the script?
Well, for us, we tend to take a little bit of a more medium-term view in terms of tactical asset allocation decisions. However, there are some things that do stick out as, warranting remembering as we move forward through the year. And I think, not to secure my next invite, but Powell's answer to Mike McKee, I think, was pretty telling in this. And Mike was asking about the question is, do we need below trend growth? Do we just need slowing growth? And then, the Fed chair, I think, came out with an explanation that helps backfill the amazing moves we've seen this year, which is, largely, I would say, U.S. growth consistently surprising to the upside and inflation coming in, right around where they're expecting. And, the way Powell squared that circle was to say, hey, maybe potential growth is actually just temporarily a lot higher than we thought. He could have answered that a very different way. He could have said that, in fact, some of the unwinding we've gotten on inflation is very temporary, and because of the real growth outlook, we're still concerned. What I took from this is that the Fed's outlook, the Fed's call on real GDP growth, the strike price on that is a lot higher than I would have previously thought heading into this meeting. That's a good news story for the expansion.
Luke, what I saw yesterday was a lot of activity before the Fed meeting. Very, very unusual. Just on the Bloomberg terminal, lots of red, green blinking, pulsing, if you will, before 200. Was yesterday one big short squeeze, whether it's bonds or it's equities? Was it one big cover?
Well, I think that's certainly a possibility. And, to set the stage, the context of where we were heading into this meeting, since the inception of the MSCI ACWI and, the Bloomberg U.S. Treasury Bond Index, this is the first time since at least 1987 we've gone 3 straight months with both of those falling. So a very bad 3-month stretch for financial assets. So when you get the Fed saying, effectively that, hey, we might be done. The bar to hiking just through real growth surprising to the upside is a little higher probably than you otherwise would have thought. And we're acknowledging, as Scarlett noted earlier, that there's going to be some bumpiness on the path to getting inflation lower. And I think that's, pretty much alluding to, 6-month annualized core inflation, probably going to pick up a little as we head into year end, and 6-month PCE on the core side, probably going to flatten out a little. I think all that provides a bit of good fodder for, maybe perhaps getting some relief in risk assets. Certainly help that some of the non-economic factors that were propelling treasury yields higher, we got some news effectively saying that those might not be as bad as we thought, at least in the coming quarters.
So, Luke, I'm curious to get your take, given what we've seen in the earnings reports so far. The numbers, by and large, are pretty decent, but anyone that doesn't live up to the highest estimates in terms of the forecast gets punished pretty quickly. By first half 2023 standards, the Magnificent Seven earnings seem to have disappointed. What would you say by regular standards if we didn't have this big run-up at the start of the year?
I would say we saw a big kind of change in timbre in terms of how the market was expecting this quarter of earnings versus the 2 prior. Q1, Q2, you were seeing pretty large negative revisions coming into season, which does make it a lot easier to surprise to the upside. You didn't see that as much in Q3. The bar was higher. results were still solid. But I think what we're seeing that's kind of most concerning, and this comes through in ANIC data through the Beige Book, and it also comes in more qualitatively and quantitatively through the guidance we're getting from companies. Right now, what's happening is that Q4 estimates, for the point in time we were at in the year, have seen a pretty negative revision as we move from Q3 to Q4. And I think that mirrors something that Tom was talking about in the opening. This is a very expected deceleration in growth. It's been highlighted by economists. It's now been highlighted by corporate America. And our view is effectively that just the real income growth you're getting is going to be sufficient to keep earnings growing, and that estimates last I checked on the Bloomberg terminal at about 0.8% for Q4 growth. That's still low in the context of how strong the handoff seems to be from September and October, and the most persistent dominant element of this year is the U.S. data surprises on the hard data side, just so consistently to the upside.
So how does that set us up for the kind of forecast that Apple is likely to hint at when it announces results later today? I mean, people look at it as this proxy for China growth, for China demand, for U.S. discretionary spending, certainly for high-end items, and also the shift of the global supply chain away from China.
Yeah, certainly going to be a big event in terms of commenting on single names, not something we tend to do, even a name as big as Apple. So I'll duck that one if you don't mind, Scarlett.
Duck away, Luke. When you look at overall conditions right now, how oversold are we? Because with the Nasdaq 100 and the S&P 500 in correction mode yesterday or last week, certainly not yesterday because of the big rebound, it's making stocks more prone to relief rallies. Is this just another leg of the relief rally we're seeing right now?
So we do expect heading into year end, as you phrase the question, as stocks or bonds. Over the medium term, we think both probably fairly good, considering expected returns have improved a lot, particularly in bond world. But more tactically, we do think that the outlook is for equities to be rallying into year end. I would say, based on some of the guidance we've received recently from corporates, maybe tempering our expectations for how much of a Q4 rally you get. But our view is that the earnings story, a calming in bond volatility, a seasonality, and to your point, the extent of how oversold we got are factors that are going to help. Looking under the hood, we did see a lot of components that are trading below 50-day moving averages, et cetera, et cetera. We pretty much got to levels consistent with a lot of decent market bottoms before.
Luke, thanks for the brief. Luke Kawa with us with UBS Asset Management. Yesterday there was one headline, 40, 50, 60 headlines came out, and there's one headline that stuck out like a sore thumb, where the chairman's talking in the statement about cumulative inflation. Scarlett, I take real issue with this. The suits and ties talk about monthly, month over month, year over year in that. That's not where we're living. Cumulative inflation. On radio, let me explain this to you. This is USDA. How much do groceries cost? 1 year they're up 3.5%, way over a 2% normal. The next year they're up 3.5%. And in 2022, they ballooned up 11%. And that's a cumulative, almost compounded in aisle 14 at your store. Groceries have gone up 19%. And the two Americas here, the fancy America that we're talking to every day, is talking all these fancy statistics. And what people are living is not from the beginning of the pandemic, but somewhere deep in the middle of the pandemic.
Exactly.
Groceries are up 19%.
You can't go to Costco without accumulating a bill of about $400, $500. And that's what gets people discouraged, disgruntled. It doesn't matter that inflation is coming closer to that 2% target if your Costco bill is about $500.
What is the number one thing at Costco where you go, wow? To me, it's beef. I look at beef and I just start laughing.
Just the Halloween candy. It was $20, $30.
Oh, really?
Yeah.
Okay, thank you. You stocked up at Costco on the Kit Kats?
Unfortunately, yes. Now we have a lot to work through.
This is something, folks. This cumulative phrase from Lyle Brainerd is maybe the most important phrase of the last 24 months. It's cumulative inflation, something we're all living. Futures up 19, Dow futures up 84. The VIX stunning. We'll talk about the VIX here in a minute. Scarlet Fu, she's so large, she's in for both. John Ferro and Lisa Abramowicz. It's a miracle. Stay with us. Bloomberg Surveillance.
Last month's jobs report caught everyone off guard.
Major upside surprise on the headline number.
Considerably stronger than people thought.
Almost twice as much as what the expectation was.
This Friday, Tom, Jonathan, Lisa, and Mike will bring you crucial data and expert analysis at terminal speed.
Rates are going to have to stay higher for longer, potentially even go higher.
Can there be lasting damage here?
Those cracks are starting to form.
The October jobs report, Friday on Bloomberg Television and Radio.
We're continuing working to significantly step up the flow of critical humanitarian assistance into Gaza. The number of trucks entering Gaza continues to increase significantly, but we still have a long way to go. Israel has the right to responsibility to defend its citizens from terror, and it needs to do so in a manner that is consistent with international and humanitarian law that prioritizes the protection of citizens.
The President of the United States managing the message yesterday here is the images from Israel, from Gaza continue, and of course the other areas of Israel, the West Bank and the northern border with Lebanon. Interesting to see. We're going to dive into that right now. Greg Vallier to join us here in a moment. Let me do a data check. Jonathan Ferro, Lisa Abramowicz, they're both off today. Scarlet Fu, we are thrilled that Scarlet Fu's people would release her from the afternoon to come do this in the morning as well. We have a continued equity lift off of the joy we saw yesterday in the Powell press conference. Extraordinary move from 200 yesterday. The report in summary for those keeping scores, the Fed is done. At least that's the belief. Futures up 20, Dow futures up 94. The VIX, we'll go to this, the 21 level into 16.47 on the VIX. In the yield market, yields continue to come in. That's important. A 10-year yield, 4.72%. The 30-year bond, you recall, was at 5%. It's in a solid 10 basis points, make it 4.91%. Oil does not play today. The dollar churns, fractionally weaker. And yes, I am on the Japanese yen watch. Really not much news there in the last 48 hours, but something we're watching as well. Right now, we're going to go to Tel Aviv. Oliver Crook with us, as you heard the president managing the message as well. Oliver, how is the government of Netanyahu, how are they managing the message in Tel Aviv in the last 24 hours?
So you heard from Netanyahu this week, and again, the message was very, very clear, which is one against any kind of ceasefire and really on the defensive, Tom, and Netanyahu defending himself, as we've talked about, politically, internally, but also against the accusations from the rest of the world. And I think it's something that we need to bear in mind, that is the further that you get from October the 7th date, the attention, the balance of attention is going more and more into what's happening today in Gaza. And as that time elapses, as we hear from the authorities in Gaza, that's 8,800 people that are dead, according to them, 2/3 of which are women and children. So the United States, and standing behind this government, is going to have to address that. And as Blinken comes in, you know, Tom, we put it in the context. Blinken, what has changed since he came last time? He will be in Tel Aviv. Yes, he will also be in Jordan. Jordan has called back its ambassador to Israel. Significant. Jordan, one of the first countries to make peace with Israel back in the 1990s. But again, taking issue with what is going on in Gaza and the renewed calls by the king and others that saying that the West and its attitude is indicating that Palestinian lives matter less than the Israeli lives.
So to follow on that, with Antony Blinken visiting the Middle East again, visiting Israel, visiting Jordan, what is his objective here? If things haven't changed all that much, what would count as a victory in this next trip?
I think that what will be interesting is, of course, I think that from the Israeli side of the trip, you're going to expect some of the same things that we've gotten throughout, which is the sort of full-throated support. Maybe there's a bit of the tacit sort of suggestions about how they conduct themselves, how this military operation is undertaken. But I think the more interesting part will be the side in Jordan. Where is the United States? How is Jordan viewing their role in this? And also, will he go to other countries within the Middle East? If you recall, last time he was here, he went to the UAE, Saudi Arabia, Egypt, Qatar, all of these places. Is he going to expand that? And as well, the Saudis, an interesting question there. When you have more and more activity from Yemen with cruise missiles going over Saudi airspace, as we understand it, I think that that part of the trip is going to be critically important to watch, and any comments from those nations.
Oliver Crook, thank you so much. In Tel Aviv with our team led by Ethan Bronner as we continue to look at the war in Israel. Gaza, and other points. Joining us now on the other points in the wars of Washington, Gregory Valliere. He's Chief U.S. Policy Strategist at AGF Investments. Greg, I believe it is November. That's 12 months away from an election. Take the drama of October and our many wars and fold it into how things change 12 months before an election. How does your world change given the pending one-year-out election?
Well, good morning, Tom. There are so many unknowns. I'd say one big one is Benjamin Netanyahu. If you saw the extraordinary story in the New York Times on Monday talking about how Israel and Netanyahu were blindsided by Hamas, they got totally caught off guard. There's going to be recriminations. I think that has to be looked at very carefully. There's that, there's the Fed, and there's this continuing fight in the House between fairly moderate Republicans and the right wing. That fight is about to resume within days.
Right, but you've got a right-wing Speaker of the House now. Shouldn't that restore some order in the House?
One would think, Scarlett, wouldn't one? But I'm not quite sure about that. I think that even a handful, 4 or 5 House Republicans could block this next spending bill. And there are Republicans in the House who don't want to spend money on Ukraine, as you guys know. And there's some lukewarm attitudes toward Israel. But the big fight still is a budget. We have a budget deadline in about 2 weeks, and they're not close to being done.
Yeah, and so we're watching that November 17th deadline very carefully. I want to get your take also on what the economy means for the presidential election. Try as it might, the White House has been selling Bidenomics, but it's not doing very well when consumers are feeling pretty sour. What does the current Fed policy mean for the economy in 2024?
Well, I think there's maybe some relief among consumers that the Fed didn't raise rates, but I thought you and Tom a few minutes ago hit it perfectly talking about food prices. I mean, food prices are up, what did you guys say, 19%?
Cumulative, yeah.
Over 3 years.
Over 3 years. But that leaves an awful lot of people, maybe not us, but leaves an awful lot of people discouraged that this is not improving.
Yeah, what's important there, Scarlett, is the USDA, this is really good data from the U.S. Department of Agriculture. They say that for the have-nots of America, it's not third world, but 30% of their compensation is going to food.
Which means 30% of their compensation is not going to discretionary spending or anything else that usually supports the economy. Greg, I want to bring it back once again to Fed policy and the economy in 2024, because Jay Powell's term expires as Fed chair in early 2026. So whoever wins the 2024 election would get to pick the next Fed chair. What does that mean to you? And I bring this up because if Donald Trump wins the nomination, yes, he nominated Powell as Fed chair, but he also nominated Judy Shelton as a Fed governor.
Yeah, I think if Biden wins, obviously he'll try to keep Jerome Powell. If Trump wins, he will get rid of Powell as quickly as possible. And that will, I think, cause some anxiety for the markets. You know, one other quick point I would make about what we could see in the next year or so that maybe is outside of the box. I wrote a piece this morning on Robert F. Kennedy Jr. There's a new poll out overnight from Quinnipiac showing him at 22%. That I was surprised. I think a lot of people were surprised to see that. And I do think that he will take away from Joe Biden, young people, independents, African Americans, environmentalists. Robert F. Kennedy Jr. is not going to be the next president, but he may determine who will be.
Greg Valliere, thank you so much. With AGF Investments, writing every day, really a must-read piece. Look for that from AGF Investments of Toronto. I want to look at the equity markets right now. The SPX up 21 points, 0.5% move. That's a large move. And we look at it through the VIX, the volatility index of the Standard & Poor's 500. A higher number is fear. The joy, the nirvana, Fu sold everything at a VIX of 12.82. We go out not to angst, not to a 30 number, which is real crisis, Scarlett, but we go out to 21.71. And just like that, accelerated by what we saw yesterday afternoon and this morning, we're back to a VIX of 16.47.
Yeah, below 16.5. The average over the last 5 years is 21.3. Can we still rely on the VIX as a reliable indicator?
That's a loaded statement. There's some sophisticated ways to look at. Mark Crudmore's excellent at this. I mean, I like my eyes.
Check him out on the MLive blog on the Bloomberg terminal.
All I know is we're at 16. It's back. It's a bull market, I think, or something.
Yeah,
like
a week
that.
after a correction, sure.
Apple this afternoon. Bloomberg Surveillance. Jonathan Ferro, Lisa Abramowicz, and Tom Keene. Mr. Ferro and Ms. Abramowicz, they are off today. Well-deserved sojourns as well. I demanded the attendance. Double tour of duty today. One Scarlett Fu. She'll be with Catherine Greifeld this afternoon for those important Apple earnings. Let's take a quick look at that right now. Thank you so much for joining us this morning, Scarlett. I don't think it's a small matter. Apple matters to the American psyche.
Oh,
There's
absolutely.
no other way to put it.
I mean, people are lining up to pay thousands of dollars for a phone. I say thousands because when you add in the tax, it's about $1,200, $1,300. And the problem for Apple is that Chinese consumers aren't necessarily doing that.
Yeah, it's a mystery. Our Mark Gurman with real leadership coverage on this for Bloomberg News makes real clear. This time around, China is the mystery.
They're all excited about the Huawei phone.
We'll see. We'll have good coverage on that this afternoon with a lineup of guests through the day. On the market, futures up 20, Dow futures up 90, VIX solid. That's what the new phrase, strong, not solid, strong VIX, 16.49, really coming in from a 21 level as well. Yields, they continue to come in 2 basis points in the 10-year yield. I'm going to go to Brent crude right now, the global price, $85. We did not get to a 79 print on West Texas yesterday. I'll have to double check that, but I believe I don't have much of a story in currency today. Bank of England, we'll get to Sarah Hugh in a moment, 121.90. On sterling. Under surveillance this morning, President Biden urging Israel and Hamas to pause fighting in order to free hostages. The president stopping short of supporting a full ceasefire. This is Hamas says 600 more foreigners and dual nationals may leave Gaza today. It evolves with Oliver Crook's tone there. To me, it's literally evolving, not even day by day, half day by half day.
Hour by hour. And of course, there's increasing criticism of Israel's operations in Gaza. You've got more countries withdrawing, recalling their ambassadors. Oliver mentioned Jordan, Japan as well, some Latin American countries. It feels like the U.S., in standing unequivocally behind Israel, is feeling a little bit more lonely in doing so.
Hussein and rather Abdullah in Jordan is a hugely symbolic pull away to have their embassy go back. This is, of course, right adjacent on the Eastern Front to the West Bank. And it's, this goes back to the 90s. This is Bill Clinton in that year as well.
We'll see what Antony Blinken says when he does go to the Middle East once again, his go-round trip again.
Go-around trip again. Mike McKee, late in the press conference yesterday, noticed that the Fed leaving rates unchanged. Not a surprise there. Chairman Powell hinting that the central bank may be done hiking. And, we'll have to see. Now, the focus this morning goes to the Bank of England, Governor Bailey and all, and it's a completely different story over there. John's been really articulate about this, but Scarlett, their inflation is different than our inflation. There's no other way to put it. I don't know if no, I don't think so. I think that's exactly right. We have a lumpy inflation affecting some of American society. The fancy people, maybe not all that much, but in England, it's much more pervasive. And I would again go to our odd housing market with 8-point-X mortgage rates, completely different than their floating rate debt market.
Well, nobody else in the world has these fixed rate mortgages for 3 decades like we do in the U.S. with the government buying up a lot of those mortgages. It's a completely different story. When it comes to the BOE, they're allowed to dissent. Did you know that? They don't have to vote unanimously.
Yeah, well, I'm glad they do. And again, holding court there, Catherine Mann, of course, of Brandeis and Citigroup over there with Megan as well. Right now, and this is important, and this is perfect to have Scarlett Fu here because she is a surveillance celebrity lodestone.
I watch a lot of TV.
Fortress Iger, they're going to buy the rest of Hulu. I don't think that's a surprise, but I thought $8 gajillion was a lot. Scarlett, negotiations expected to last months, but Disney expected the deal to be completed. What's so what on this? Why do I care that Disney will take out Hulu?
Well, Disney already owns 2/3 of Hulu. Comcast owns the remaining 1/3. And as part of the acquisition of the Fox assets, they had agreed that one or the other would make an offer for Hulu. So Iger is now looking to resolve Hulu, but he also has to sort out a whole bunch of other issues, right? ESPN, partnership, maybe investment, linear TV in the U.S. Is he going to sell that? That's what he hinted at. Operations in India. He's also got to fend off Nelson Peltz. So he's got a full to-do list.
But to me, the basic idea here is with Netflix dominant, is the basic idea, do you merge Hulu with Disney Plus? Do you merge the kids channel and Star Wars?
You mean bundle it?
Bundle it. Or no, I don't mean bundle it. I mean merge it right into one platform.
I don't know. Hulu doesn't have the brand recognition that Disney Plus does.
Do
you watch Hulu, Tom?
I don't watch any of it. And what I notice at home is mostly what people are watching is YouTube. We say good morning. Bloomberg Surveillance on YouTube Live, that's a good and beautiful thing. That's what they're watching.
Nice segue.
Oh, I do that. We're shameless promoters, unlike the clothes.
You should watch The Bear on Hulu.
What's it called?
The Bear.
The Bear.
Yeah.
I don't know The Bear.
Well, you like Taylor Swift, and there's a good Taylor Swift reference in The Bear in season 2.
Okay.
Yeah.
We'll get a Taylor Swift brief from our celebrity lodestone here in a moment. Right now, we have a needed brief here on the Bank of England with their announcement today. Sarah Hewen joins us, head of Europe and America's research, Standard Chartered Bank. Do you expect a surprise from the Bank of England, or is it supposed to be a snooze fest like the Fed was not yesterday?
Well, it is supposed to be a snooze fest, so it certainly would be a surprise if we do get a rate hike. And I mean, that's the risk. We could still see another split vote, perhaps hopefully not as close as it was last time around, but we may see 3 policy committee members still voting for another 25 basis point hike. Last time around, if you remember, they were still concerned about inflation pressures. And we've still got inflation, 3-4 times higher than the target. Now, we know that it's going to be coming down over the course of the next few months, particularly October's inflation will be a step lower because of the energy price impact. But there is still concerns about what's happening to wage growth.
Right.
And could that ultimately be inflationary?
You do what first-class economists like yourself do. You look at base effects. You go 12 months on, folks, and when you go to the 13th month, you forget the agony of the month 13 months ago, and we have base effects. The people watching this in England, in the United Kingdom, Sarah, are not worried about base effects. They're just looking at a gigantic move in energy inflation, food inflation, and that. What is the pain of inflation in the United Kingdom right now?
Yeah, it is clearly very painful. There's a big cost of living crisis, and that's being exacerbated by higher mortgage rates. So increasingly, people either on floating rates or people who have fixed rates mortgages that are having to refinance, and those refinancings are coming up with each month that goes by, then that is a big burden on many households. Of course, you have a split. For some households that don't have mortgages, that have high savings, are seeing, let the good times roll because interest rates are high, they're getting high returns on their savings, and they don't have the burden of mortgages. So there is a split in the UK, but certainly we're seeing increasingly the impact of higher interest rates starting to weigh on growth. Growth expected to be 0 for the third quarter. And that's a big contrast, really, with what we've seen in the US, where third quarter growth was so strong.
Absolutely. We talk about, or we joke about this BOE meeting being a bit of a snooze fest. The last BOE meeting in September, the decision was anything but, because the decision to hold surprised a lot of people. And it also, to Bloomberg Intelligence's point, indicates increased tolerance for upside data surprise. What is the extent of that tolerance, Sarah?
There is some tolerance. The Bank of England's forecasts are for very weak growth and for a big fall in inflation. So I think that there is a view that there are, fundamental effects that will bring inflation lower. But as we had such a close vote last time around, then any persistent upside surprises on either activity, particularly on wage growth and on inflation, will be a warning shot for another hike in rates. Can I just say as well that the labour market data are very unsatisfactory, and so the Bank of England is hobbled by not really knowing what's going on with jobs, with wages. The official data aren't really telling the true picture, and so there's a bit of guesswork that's needed to be done on that.
So the guesswork extends to the terminal rate as well. The BOE's chief economist has described rates at a table mountain. Tom had never heard of that term. You had brought up to us that people have used the word Matterhorn to describe where rates stand. Give us some context here on what table mountain means and where the BOE is headed when it comes to terminal rate.
Yes, I mean, this was Hugh Pill really describing his own view that Bank of England rates would need to stay at current levels or higher, but staying high for long. That's the mantra. So having reached a peak, that peak stays, a level for quite some time. The Matterhorn idea, actually, that's what we've seen in other economies. For example, in Brazil, where you saw a huge and rapid increase in rates, and then an equally rapid reversal in rates. The main theme here from Hugh Pill and from others in the Monetary Policy Committee is don't expect rate cuts anytime soon.
Sarah, what is Standard Charter? You've got the huge advantage of Stephen Englander working with you. What do you see on euro, sterling, or on cable?
Good question. I mean, we see dollar staying strong really against sterling and against euro as long as the US economy appears to be outperforming. I mean, there's such a big difference here between what we're seeing in Europe and UK on the activity front versus the data that are coming out of the US. Now, we expect that to change. We're looking for US to grow below trend over the course of the next 12 months. Expectations of Fed rate cuts starting to be factored in. We think that they'll start in the third quarter, and that as those expectations start to feature, that will weigh on the dollar.
Sarah, thank you so much. Sarah Hewen, Standard Charter, and of course we look for the Bank of England here this morning. I'm going to call it. Help me here, Chris. Is it 20 minutes we're going to see Bank of England, or is it 7:15? I can't keep score on this stuff. 8 o'clock. Okay, it's daylight saving times or whatever. It's like out there.
Yeah, usually it's 7.
1 hour. It's usually 7. Did I get that right?
No, you're right.
I didn't screw up. Of course, part of the problem we have is Ferro would never do this. I mean, Ferro and I were talking, what Newcastle did yesterday in football to Man U and all that. Can't talk about that now. We got to go to the celebrity loads on Scarlet Fu. In a few days, she will be at Madison Square Garden for the reopening post-pandemic of the American concert. How about this? Rockstar seats for Fu for Pink. $4,500
I'm not
per
sitting
seat.
in these Rockstar seats. This is Section A, row 16 that you're quoting here, $4,516. That's not where I'm sitting.
I mean, this is a follow-on from Taylor Swift and Beyonce. And, tell us about this. I mean, it's like entertainment is back.
It is back in a big way. And Live Nation's going to be reporting earnings later today as well. So we'll really see the extent to which people are shelling out for tickets. And if they're not, they're going to go see the Taylor Swift movie through AMC.
I mean, you wonder if there's a Pink movie. I mean, let's be clear. Scarlet Fu misunderstood. I mean, I get that from like 2 albums ago or 4 albums ago with Pink. But the whole Swift thing and the Beyonce thing is redounding across the whole industry. Yeah. Is what I see.
Well, I mean, it's a way for artists to make sure that they monetize off their music as opposed to having the streamers take all of it, Spotify and everything else, and they get pennies or crumbs from that revenue.
So my math here is 2 people. Section A is $9,000. What does that make Taylor Swift's tickets?
Oh, it's just astronomical.
It's astronomical. I mean, it's ginormous.
Did anyone in your household ask for a Taylor Swift
ticket? Look, the last concert I went to was 3 Dog Night, so leave me alone.
Wow.
That was, a few ways ago. We're going to have a lot more on this. Of course, Paul Sweeney helping out here with the entertainment world. And you mentioned this earlier, Scarlett. I mean, really one of the great stories of 2023 is the absolute collapse of Disney. I mean, that's a blue chip stock. Did you know that?
It is a blue chip stock.
You give it to your grandchildren.
Bob Iger came back, and it's a very different Disney than the one he left. I mean, he left at the top. He thought, this is it. I've set up everything for my successor, and now he's coming back and cleaning up a lot of the issues that were, frankly, there when he was CEO the first time around.
We have coverage on that, and of course on entertainment, Apple involved as well. Look for our Apple coverage to close this afternoon. Scarlet Fu, Catherine Greifeld, they will go beneath the headline data from Cupertino as well. Much needed. The banks beleaguered. Gerard Cassidy, RBC. Maybe our interview of the day. This is Bloomberg Surveillance.
If you're a bank, what you're doing right now is you're holding cash. That is the game. They are bidding up on the liability side of the balance sheet. They're issuing CDs, time deposits, etc., to take in more money because they're seeing retail outflows, and then they're holding cash. And they're going to continue to do that until they see signs that the economy is turning.
The show stopped yesterday for Mark Cabana of the Bank of America. Brian Moynihan reads his research because it is about this linkage of what fixed income and yield pricing says about the state of commercial banking. Good morning, Bloomberg Surveillance. Jonathan Ferro, Lisa Abramowicz, off today. Thrilled that Scarlet Fu could darken the door and help out so much. Futures advance in the last 20 minutes, up 21. Make it 22, the VIX 16.45. I'm going to make a quick data check here because this interview is so important right now. We got 4.71% in the 10-year yield. I did a chart in the last 48 hours of the Keefe, Bruyette, and Woods Bank Index. It's what I use. There's other indices as well. It's big banks, it's regionals, and it's the little banks sprinkled in as well. And I rarely use this word, folks, not editorializing, just looking at the technical analysis. It is a grim chart. And I said to our wonderful team, can you get the gentleman from Portland? Joining us now, Gerard Cassidy of Maine, head of U.S. Bank Equity Strategy, large cap bank analyst at Tucker Anthony and R.L. Day, a name from the past, of course, with RBC Capital Markets. Gerard, you've been doing this for years. I haven't seen a chart like that since ages and ages ago. Why is there no bid to acquire banking shares?
Tom, you're right. As you are showing, the chart is quite grim, and there aren't many experts in technical analysis as you've observed, and you've observed it right. It's really just an awful.
Okay, we're breaking up there right now. We're going to try to reconnect with Mr. Cassidy. We'll see if we can do it by phone or semaphore. And so I'm going to turn to Scarlet Fu with her knowledge of this. Rarely do I say never. And yes, I've seen where we go on strike with banks. Boy, are we on strike with banks. As Mark Cabana pointed out yesterday with Bank of America.
Yeah, and Gerard Cassidy was telling us earlier that the scar tissue from March from the regional bank, do we want to say crisis or stresses or tensions?
You can go with any of them.
However you characterize it, it's pretty deep, the scar tissue. And I wonder if it's more paralyzing for the banks themselves and how they operate and the decisions they're making, or for investors. You mentioned the KBW Bank Index. Year to date, it's off 26%, 27%. There are 24 members. You know how many are higher so far this year?
How many?
2.
Yeah.
JP Morgan Chase up 3.6%, and Capital One up 7.9%.
And what's so important there, and Mark Cabana went to this tension here, is that if deposits go out, say, to money market funds, just as one part of a complex soup, you're forced. There's no choice. There's nobody sitting around making options here or hiring McKinsey to consult. Mm-hmm. You're forced to get smaller. Mm-hmm. And so many banks on their balance sheet are forced to just bring it in. And that's a major reason why people are on strike here.
Remember when Janet Yellen, the Treasury Secretary, said there'll be consolidation in the banking industry?
Where is it?
Where is it? Well, no one wants to mark down anything at the moment. And when talking to different people, they said something has to happen for there to be forced consolidation.
Yeah, I'm very biased on this, and that I think a lot of bankers just like to go to lunch and they like their jobs and they don't want to merge.
Who doesn't like to go to lunch?
Yeah, it's synergies and all that. But you got to believe at some point here, we see basically, I'm not saying a complete roll-up a la Canada where you've got 5 banks or so, but you get some form of mergers and acquisitions. And with the decades of work of Mr. Cassidy at RBC Capital Markets, it's a good place to pick up again with him. Gerard, when do we see mergers? You got to be kidding me. I mean, I get it. There's 4,000 banks. We're not going to 5 banks like Canada, but when do we see a frenzy of consolidation?
Tom, it's a really good question because, as you pointed out, back when you and I were young men in the early 80s, we had over 18,000 banks in this country. We're now down into that $4,000 to $5,000 range. But to your point, it will come back. It's not linear. It always comes in waves. But the biggest obstacle to M&A today is when the buyer goes in and marks the target's book to market. There's a big gap. So think about it for a moment. When you mark the assets to market, the value of those assets are much lower than historical costs today, which means there's a gap in the capital, and therefore the buyers cannot pay big premiums, and there's no deals happening. Plus, you have the regulatory issues, too.
Gerard Cassidy, Jeffrey Rosenberg of BlackRock was heated yesterday that even a sort of kind of like bond recovery of price up, yield down, isn't going to help the banks. They need basically a miracle. Do you ascribe to that, the idea that just a good bond market's not going to get it done because the losses are so great?
I would say it would help in a big way, Tom. I'm with him in the sense that when QT ends, I expect the 10-year bond yield to start falling maybe even more rapidly. And the reason that's going to be positive, because as you know, the banks have very large unrealized losses in those bond portfolios. Bank of America, of course, is the one that everybody points to. And so a lower 10-year would be very positive for the banks. It would start to your chart again. It would start putting in a bottom on the chart, in our opinion. And if we don't go into a hard landing and credit is not a problem next year, these stocks are poised to have an incredible year, just like 1995, Tom.
Well, we're waiting for the catalyst. Gerard, you talk about the bond portfolio. What about the real estate portfolio? Commercial real estate was supposed to be the other shoe to drop. And for months, we've been waiting for this since March. We know plenty of banks have exposure to that sector. But what's really going on beneath the surface?
It's a really good question because you're right. There is still fear, and there should be. There are some properties in our major urban markets. California Street in San Francisco is one of the more famous ones, dropping in value, I think 70%. So there's wipeout of not only equity, but also the lenders. But two things have happened by that. First, in the very big properties, when you go to the bankruptcy filings, it's not the banks that are lending into that. It's the CMBS market or the shadow banks. They have the exposure. Second, the banks that do have exposure, they're working with their customers. This is not a situation where the property is undervalued, they're up for refinancing, and the bank forecloses. That doesn't happen. They work with their customers, and we heard that very clearly from the banks like PNC, who's one of the best banks in the regional space. They're working with their customers, and they're working to get through this period of challenges in commercial real estate.
So if non-banks have this much exposure, once we do start to see commercial real estate become a bigger factor, what kind of spillover effects would that have to the rest of the banking sector?
There will certainly be some spillover effects, but we have to remember, the owners of the CMBS market, the non-bank lenders, Jamie Dimon in his annual letter pointed out this year that the banking industry has $12 trillion of loans outstanding. The non-bank lenders have $20 trillion. That's where the risk is. The Fed, because of what happened in 08-09, has de-risked the banking industry. And so the spillover will come, but I think it will be very manageable.
Gerard Cassidy, you're outperform on Citigroup. Fortress Fraser, you got to be kidding me. Reverse stock split, I'm looking at $3.96. When does Citigroup get their act together and give us a Gerard Cassidy outperform?
Tom, it's a great question, and it's been a very frustrating stock, of course, and she's doing, I think, a very admirable job in turning around this very large ocean liner. It's unfortunately going to take a while. It's not a 6-month and fix. But we have to think about for a moment, Tom, you and I know this company for years, and when you think about all the CEOs that they've had, she's the first one to actually make real progress in selling businesses that are not meeting their profitability hurdles. Just think about Mexico. That was kind of off limits, and she's the one now has put that up for sale. They didn't sell it. They're going to take it in an IPO or spin-off in 2025. But that, to me, is real progress. But, Tom, you're right. It's a value trap so far, but as she makes progress, I think it's going to finally work, but it's going to take time, no doubt about it.
Trooper for getting on the phone. Gerard Cassidy, thank you so much for the banking brief. He's with RBC Capital Markets. Scarlett, I'm sorry, this is a huge, huge story to me. I go back to Bernanke 101. The strength of the banking system is everything. That's the Bernanke research over the years at Princeton. And right now, the banking industry, the strength isn't there.
It's as strong as its weakest link. And if you look at the biggest banks, you mentioned Citigroup, it's trading at 0.4 when it comes to the price to book ratio. JP Morgan Chase, which is the best performing bank stock so far this year, its price to book ratio is about 1.39. It's a huge gap.
Okay, this is so much fun. I mean, it's always fun with Bramo, as fun as you can with a toxic brew. Ferro and I don't speak together when we're not on the show, so it's sort of fun that John's not here. But having the foo here is great. And it brings back memories. Me and the foo. I mean, you got to be kidding me.
Look at that.
Look at that photo. She hasn't changed a bit. Me, on the other hand, it's the first place New York Rangers. It's extraordinary.
It's 9
on
games
radio.
in, and we love
Vivi Chara and Scarlett.
I think I'm wearing
it's a
James
photo
Patrick
of us in the jerseys on radio. Good morning.
We're going meeting by meeting. We're asking ourselves whether we've achieved a stance of policy that is sufficiently restrictive.
Clearly what the market saw was a preference for the worry of tightening financial conditions. We're at sufficiently restrictive. We could be done.
If I were recommending or talking to Jay Powell, I would recommend that he leave the door open.
Our concern is sort of around May and June, where is the Fed going to be?
It's unlikely that 1/4 point move is going to be sufficient to do the job. So I think it's either zero or multiple rate hikes.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Good morning, everyone. Jonathan Ferro, Lisa Abramowicz, and Tom Keene. Day after the Fed, day before jobs report. Apple sandwiched in there somehow. Thank you for joining us on radio and television. Jonathan Ferro, Lisa Abramowicz. We're not on speaking terms. They're off today. Always on speaking terms with Scarlett Fu. Double barrel Fu today on Bloomberg Television and Radio. The close this afternoon. And, you know, I mean, we got a lot to talk about here, including that great opening montage, particularly from Vice Chairman Clarida. They're talking, and Bill Dudley with his fiery op-ed. We'll get to that in a moment. Apple this afternoon. How are you and Catherine Greifeld preparing for that?
We're all over it. How many iPhones did Apple sell in North America? It's going to be decent. How many iPhones did Apple sell in China? That's where the concern lies, because everyone's picking up the Huawei
It's a concern.
Mate 60.
25% per year for the last 10 years is the total return on Apple. There's not a lot of dividend in there. That's just stock lift.
It's not really growth stock. It's not really a safety stock. It's just kind of the all-purpose stock.
We're going to circle back to that here in a moment. The Fed was so important yesterday, and the market move that we've seen there is so important. Let me fold the data check into our Fed discussion. The equity advance that we saw, the energy before 200, the energy through the press conference, up on stocks, up 22 points on Standard & Poor's 500, 42.78, up 0.5%. NASDAQ 100 on fire. The long duration Magnificent 7. I have no idea what that means. Up 0.8%. We mentioned the VIX in the last hour, storied at 16.43. The FU with a statistic. What was the statistic? Last 10 years, 21 is the average VIX.
Yeah.
Something like
21 and a half or so. And today it's below 16 and a half.
I guess it's a bull market. That's what Ed Yardeni says. Thank you to Dr. Yardeni for joining yesterday. Yields come in again, 4.70 on the 10-year yield. Even the 2-year yield under that 5% level. Short rates coming in. David Rosenberg saying it sounds like they're done, 4.94% as well. And Scarlett, I don't know if you had a chance to read it, but Bill Dudley in the opening there, his essay yesterday was incendiary about this isn't Paul Volcker, this is Jerome Powell, and he's got to wake up and worry about being an Arthur Burns where inflation gets out of control. Right. Dudley adamant that they need to be careful about the soft landing all as well.
Right,
angle.
that a pause might open the door or pave the way for some more challenges ahead, especially if inflation accelerates because of the stronger economy that we're seeing that refuses to slow down.
Let me look here. I can do this on the Bloomberg Professional Service, folks. CL1 commodity. I'm going to go GIP2. 2-day intraday on West Texas Intermediate. We did not get down to $79 a barrel on American oil. But I would say, Scarlett, really the surprise of October, given the horror that we've seen in the Eastern Mediterranean, is oil really hasn't played. There seems to be almost an interior optimism that we'll move on from this conflict.
Yeah, but have you filled up your gas tank lately? I know that you drive, a Hummer?
No, John Tucker has a Hummer. I've got a Bentley,
okay.
But frankly, recently it's been in the garage a lot.
Ah, all right. Well, when I fill up the car, it's $60, $70 each time. No matter what, if it's $3.50 a gallon or $3.90 a gallon, it's painful.
Yeah, the oil change in the Bentley is becoming painful, to say the least. We have to talk here before we get to Dan Morris about a story tangential, but there it is, and it has not given it back. And this is the challenges of Japan. Scarlet Fu, dollar yen, 150.35. Week yen, euro yen is what I'm really watching, rounded up 160, and we're almost to the point where we go, quote, into the weekend in Tokyo, where their institutions in the quiet of the weekend have some optionality about what to do about the failure of their monetary policy.
It's so interesting that every time there's a BOJ meeting, there's a report the day before that hints at what's going to happen. Is this the new communication method of the Bank of Japan?
It's been there forever. I've actually personally witnessed it in Tokyo, and it's absolutely bizarre. It usually happens, our time, Sunday night, 7 p.m. our time. You're trying to come out of, you're getting ready for Rangers hockey Sunday night, and the Bank of Japan's with a seismic change, and maybe we'll see that this weekend. Get your radar up on that. We're going to get a briefing now with all that's going on, and particularly what we witnessed yesterday from the Fed, with Daniel Morris, Chief Market Strategist, BNP Paribas of Paris, BNP Paribas Asset Management. Dan Morris, I was thunderstruck yesterday by the market move, the energy of it. Was it just a short cover where so many people gloomy had to cover the gloom bets?
I mean, I don't know if I would characterize the sentiment now necessarily as so gloomy. I think we're still trying to reassess and absorb the shock of what's happened in interest rates over the last 3 months. But to the degree that you think that that's happened, and I think for a lot of people, the soft landing narrative is still in place. I mean, I think actually at this point, you can maybe find a bit more of the optimism you had before rates went up, looking out 6 months ahead, 12 months ahead, and think that the picture actually is more sunny than gloomy.
If I need yield, if I do not want to participate in the stock market, where's the most optimal place right now?
Well, two of the parts that we're overweight in our multi-asset portfolios, number one is Eurozone investment grade credit. So in terms of absolute yield, clearly you're not going to get as much as you are in the U.S. But it's not just a question of yield. It's always risk versus reward. And we think that trade-off is best in Eurozone and investment grade credit. But another area that we've added allocations to is actually emerging market local currency debt. So if you are of the view that U.S. yields move down, which we are, that also should be reflected in local currency EM debt, but you're starting at a higher point, so you get a bit more coupon. And we're comfortable with the currency exposure as well, as we think the dollar is topped out.
Dan, how much of your portfolio should be geared towards the resilient U.S. consumer? I'm looking at Starbucks. It says sales topping estimates on more and bigger coffee orders. Peloton giving a weak sales outlook, but does see growth later in the year. And of course, Apple will be reporting later on this afternoon. And by all indications, people lined up to buy $1,200 plus iPhones. What is the long bet here on the U.S. consumer?
I think the challenge is we've kind of maybe been swept up in this optimism, the surprising growth. We know this being driven by the excess savings, but no matter what, that's got to slow over the course of the next year, and in a very positive way, meaning we just can't sustain growth at this level. You're never going to get inflation back down to target. So it's quite tricky now, I think, to assess how that process is going to go. So yes, clearly the U.S. consumer's been great. At the same time, given where mortgage rates are in the U.S., where the interest rate that you're paying on a credit card clearly is quite high, I think it's more a question of how quickly that demand wanes as opposed to really betting on any kind of growth at the same level that we've had over the last couple of quarters.
Okay, so the easy money might have been made there when it comes to the consumer. Where does that leave you for the rest of the year? And I know this is fairly short term, but we're entering a seasonally strong period, even as October has proven to be a bit ugly.
Well, one thing that we're looking at is if you believe that you've had the valuation adjustment in the market, particularly in growth stocks already, due to the increase in interest rates, if you also think the market has now priced in the impact on growth and on earnings from higher interest rates, then you step back and say, okay, from here, what's the trajectory I expect to see for earnings, in the next 6 to 12 months. And I think you'll come back to one, the U.S. still looks relatively better, certainly compared to Europe. And within the U.S., I think you do come back to the growth part of the market. Now, I think that should be a diversified exposure to growth. We're not looking at just 1, 2, or 7 stocks. But I think that trajectory is still good. I think it's less susceptible to interest rates.
Tell me about tech from Paris, the BNP Paribas view on American tech. I'm fascinated, Dan, of the distance away from these juggernauts in America. How do you treat them out 3 years?
I think it depends on your starting point in terms of valuation, perhaps less than earnings. When we know earnings expectations have moved up a lot over the last couple of months because of AI, to what degree that's justified or not, we'll see. It can be adjusted down and you're still going to have a pretty positive earnings trajectory. I think what's crucial now compared to where we were a year ago is that the forward PE on the NASDAQ's in the low 20s. Whereas the peak over the last year or so was 33 times. So even with a great earnings trajectory, if you're paying 33 times those earnings, that's not going to work out so well, and it certainly didn't last year. I think we're starting from a point of, let's say, neutral or average valuations, which I think is a great starting point, and I think what is still a pretty positive earnings trajectory, regardless where you're standing.
Interesting to see. Dan Morris, thank you so much this morning. Really greatly appreciated. He is with BNP Paribas there on the churn there. I don't know how guys like Dan Morris write a year-end outlook.
I know. You have to keep updating it.
How do you do it?
Constantly.
It's November 2nd. Is that November 2nd? Yeah.
It is November 2nd.
November 2nd. By the 15th, you got to have 14 pages penciled out. It goes in a 60-page, phone book that, supposedly
on the 15th,
read.
You don't know if the government's going to shut down.
Well, there's that on the 17th, I believe it is. Yeah, well said. I mean, Greg Valliere touched upon that. But I don't think I've ever seen a year where I just can't make it up between the geopolitics and what we're seeing.
Well, you can look
at
the relative appeal, and it does still look like the U.S. economy holding up better than other economies around the world.
Way better. We saw in the Zeitgeist yesterday, folks, I don't have the numbers in front of me, I'm so sorry, but real GDP aggregate lift from the pandemic, I remember this number. The United States is up 8% in inflation-adjusted growth from 2019-ish.
That's bananas.
Everybody else, bananas. They cost more, but particularly organic, and they're never green enough.
They're never green enough?
They're never green. I'm buying rotten bananas at the store. I don't like that. But the bottom line is everybody else is up 1 or 2 or 3%, and with our stimulus, we chose to be up 8%. As well. We see that, I'm sorry, Scarlet Food driving the markets higher this morning. We're up 18, we're now up 22, 0.5%. NASDAQ 100, I'm not up a stick yet, but I'm up 118 NASDAQ 100 points, 0.8%. VIX, can we get a 15 VIX today? Maybe we'll have to see on that. Yields in 3 further basis points. My eyes, when I look at the Bloomberg screen on yields, I'm really not there, 4.71%. On the 10-year yield, 2-year way below 5%, 4.94%. The currency space, dollar actually resilient. I thought the dollar would pull back a little more on DXY with the 107 print yesterday, 106 on that blended major currency index. Euro, we've got to look at Euro 106, a little bit stronger Euro, 106.37. And into Lizzie Burton here in 15 minutes on the Bank of England, 191.93. The Standard & Poor's 500, it is up 0.5% this morning. And we say good morning, Scarlet Fu in for Jonathan Ferro and Lisa Abramowicz. And you mentioned, there's a headline. Thank you, Amy. I needed to see that. Shake Shack jumps 9% after third quarter revenue, keeping up with the Starbucks. I mean, it's junk food Thursday.
Ozempic not hurting Shake Shack, and it's going to be interesting to hear what the company says about the concerns surrounding Ozempic. But yeah, Shake Shack moving up in pre-market trading after a third quarter revenue beat. Revenue for the period, $276.2 million. Analysts were looking for 275 comp sales, which is, of course, the metric everyone uses here, up 2.3%. Actually, that was shy of what analysts had expected, which was 4.1%.
You look at Shake Shack and you go lunch, dinner, or how about the 9 p.m. seamless DoorDash rush?
Is that what you do?
No, it's not what I do.
Well, you don't do 9 p.m.
It's what others do. We do the Shake Shack order that arrives at 9:52.
I like the Shake Shack wine.
as well. Starbucks, I'm so glad you mentioned that. I missed that today. And of course, we're checking it out. The pumpkin cream cold brew, $5.93. I mean, what's the EBITDA of a pumpkin cream cold brew? I mean, I go in, I say I'll have a pumpkin cream cold brew, and come on, the margin on that puppy's like 92 cents, right?
Yeah, and of course with China recovering as well, this is a good story for Starbucks, and people are addicted to their caffeine. It continues. Yeah, I know. Cold brew, caffeine, pumpkin.
We would never do this. I'm going to cut to the chase. With Brammo, I got to do Birkenstocks and hummus. With Fu, I'm talking Shake Shack and Starbucks. This is a good and beautiful thing.
And we could talk the Rangers on top of that.
It's junk food surveillance. Stay with us. We did Yum Brands a couple days ago. We'll keep it going here. Futures up 23. The stock market advances. Good morning.
Last month's jobs report caught everyone off guard.
Major upside surprise on the headline number.
Considerably stronger than people thought.
Almost twice as much as what the expectation was.
This Friday, Tom, Jonathan, Lisa, and Mike will bring you crucial data and expert analysis at terminal speed.
Rates are going to have to stay higher for longer, potentially even go higher.
Can there be lasting damage here?
Those cracks are starting to form.
The October jobs report, Friday on Bloomberg Television and Radio.
I think what Speaker Johnson needs to do, and this is what he said in our lunch, is, he needs to notch a win and the trust of his membership over there. And by putting forward an Israel-only package with an offset, arguably it's an offset that's been debated, that he's demonstrating that he's interested in spending less money, but also supporting Israel. When it comes to the Senate, many of us are committed to having Ukrainian continue this to push back Putin and keep him, get him weaker and weaker, and these are all intertwined.
From West Virginia, political royalty, Shelley Moore Capito. She is a senator with Joe Manchin, and of course a different outlook, always from West Virginia, an important outlook on the backbone of the Appalachians and of course America as well. Talking there on the moment in Washington as they consider funding for Israel and for Ukraine. Let me do a market check here before we get to some important voices. We continue to lift. It's been a nonstop lift from about 2:02 p.m. yesterday, Wall Street time, up 23, Dow up 124. VIX comes in storming, 16.44. Can you imagine a 15 VIX off of the gloom of 5 or 6 days ago? 2-cent spread, it inverts a little bit, 24. Negative 24 basis points for the pros keeping score. And the inflation-adjusted yield, which is important to everyone, is cratered. That's the proper word, from 2.50% to 2.30%. That's a ginormous drop in the inflation-adjusted yield, maybe not what Chairman Powell really wanted to see. I'm going to leave it at that right now. This conversation's so important. Jonathan Ferro, Lisa Abramowicz off, Scarlett Fu really helping out today. Double duty for Bloomberg Television and Radio. Scarlett Fu this afternoon on Apple earnings. We now turn to the politics of what we are witnessing, the horror that we're witnessing in Gaza, whatever your political beliefs and outcome. Oliver Crook on watch in Tel Aviv, and Anne-Marie Horton in Washington this morning. Anne-Marie, I would suggest that most politics across the aisle, politicians just want to get to Monday. They got to try to get to the weekend given the news flow that's coming out of Tel Aviv and out of Israel. How will they accomplish that? What do they do on a Thursday? What do they do on a Friday just to get to some form of constructive resolution?
Well, it's not just complicated by the news flow, Tom, but it's complicated by new personnel. We have a new Speaker of the House. He is bringing to the floor this Israel standalone bill before the weekend. And the issue with this bill at the moment, and we heard from Shelley Moore Capito, the West Virginia senator there, she had a lunch with him along with the other Republican senators and wanted to hear what he had to say. And she thinks he has a good path forward. He is trying to get some of that goodwill in the Republican conference by saying that there needs to be a pay-for this to offset the deficit when he's going to be spending. What he wants is $14 billion to Israel. But the issue is the Congressional Budget Office scored it and said that actually this will add more than $12 billion to the deficit, because when you rescind money from the IRS, that's supposed to go after tax cheats. It's actually going to add money to the IRS. So this is the complication when it comes to Congress, on the House side, to try to pass an Israel standalone bill. And then on the Senate side, Democrats and many Republicans, especially Senate Minority Leader Mitch McConnell, want to see more than just a package for Israel. They want to see the complete package for national security partners around the world. Israel, Ukraine, Taiwan, as well as money for the southern border.
Oliver, how is this being treated in the halls of the government, a beleaguered and I guess a bipartisan unified government in Israel? How do they observe the swirl that Anne-Marie Horton's living?
I think until there is a real complication and this bill is an actual jeopardy, I think that they will be reassured by the fact that at least the United States apparently seems to be standing fully behind the government. And again, despite the comments as they evolve very slightly every now and then from the U.S., the administration has been very clear in its support for Israel. And Israel has been very sort of grateful for it, and it knows how important it is. And that is really what they're expecting to hear from Antony Blinken as he arrives here tomorrow. Again, coming both to Israel and to Jordan. However, again, the backdrop and how it's being received, maybe not in the United States, but more in the global audience. We have the Jordanians pulling their ambassador to Israel yesterday. This is a meaningful step with Jordan as one of the first nations to make peace with Israel. So they're very also conscious of the global audience, despite the fact that Benjamin Netanyahu says either alone or with others with us, we're going to continue to push this fight until victory.
So, Oliver, I want to focus on semantics for a minute here, because President Biden used the word pause when it comes to civilians leaving Gaza. Was he suggesting a ceasefire? Who is he speaking to when he uses the word pause?
So I think that it's actually not just a sort of euphemism for the same thing. I think there is a meaningful distinction between a humanitarian pause and a ceasefire. How I understand it, the humanitarian pause could look something like what we had in the first week of fighting, where the Israelis said, we will not bomb certain regions for a few hours, or you are clear to move. And maybe that is where columns of aid and people can move. A ceasefire is something that, though, even if it were temporary, involves political negotiation at the upper level, a diplomatic relationship between the two parties, which are here Hamas and the Israelis, and that is just patently off the table for the Israelis. The U.S. supports that view as well. So I think that if there is anything, it will be one of these humanitarian pauses. Again, but in order, because the Israelis will not dial back the military, can they dial forward the aid?
Yeah, so Anne-Marie, over to you. Same idea of this semantics, pause versus ceasefire. Talk a little bit about the cross currents that President Biden faces, the pressures that he faces in trying to speak of the horror that's taking place in the Middle East while satisfying the different constituents that he has to address.
Well, he's in a rock and a hard place. He was out on the road yesterday. He was in Minnesota, and he was greeted with protesters who are calling for a ceasefire. And at a fundraiser last night, someone said, I need you to call for a ceasefire now. And he says, I'm not going to do that, but I think we should have a pause to get the prisoners out. Remember, there are still Americans being held hostage by Hamas. So he's calling for this pause. But the president is under an immense amount of pressure, because what he is hearing from Arab Americans, what he's hearing from Muslim Americans, is that they want to see this Israeli bombardment on Gaza civilians to stop. While, yes, Israel is going after Hamas, there are obviously civilians that are getting caught in harm's way. We saw that over the past 2 days. Yes, Hamas does use schools, they use refugee camps, they use hospitals as their bases. And this is why the United States has said how Israel does this is so important. But the president, at the end of his comments, came back to the fact that he said, I want Israel to do this by following the humanitarian international rules of war. But he said, Hamas is a terrorist organization, flat out. That's what they are. And that's where the president is right now. And he's getting a lot of flack from Muslim Americans. And this potentially could have an impact on some of these swing states like Michigan when you look into November of next year.
Emery, I've got to go to you on this. You had the senator from West Virginia, and she's old-line political royalty. She replaced Jay Rockefeller in the Senate. And you're really good at this, Emery, in that it's not about the people in the Beltway, but it's out there. How is this all playing in the senator's West Virginia? Are people riveted by this, or is this an inside the Beltway elite story?
Israel is certainly not inside the Beltway elite story. You are seeing this conflict be debated all over the United States. We are seeing this happen every day at university campuses every day in the news on social media, some of which there is a ton of disinformation happening on social media. So this isn't impacting constituents of individual districts. What's really important right now from politicians, we also spoke with Mark Wayne Mullen the other day of Oklahoma, is how do you explain this to your constituents and why it's important? He's an individual that wants to see more aid to Ukraine. But a lot of Republicans say the Biden administration has not explained well why we should still be in Ukraine sending this aid. And he said it's because of the Budapest Memorandum. So it's how you explain it to American people, Tom.
Anne-Marie Horton, thank you so much. Oliver Crook, thank you as well. We'll have much more report on this. Balance of power, look for that tonight. Futures up 23, Dow futures up 123. The VIX, really extraordinary, 16.46. I'm going to say that started with the Fed meeting yesterday. Scarlet Fu and Tom Keene, Bloomberg Surveillance. Bloomberg Surveillance, good morning. Jonathan Ferro, Lisa Abramowicz, and Tom Keene. Bramo off. Just way too much optimism yesterday. She had to be medicated. She's home. John Ferro off. He was on a cruise, and his Scarlet Fu with us today. John's cabin was so big, 16 floors up on one of those, cruise ships, that he could see out the starboard side and the port side. He got so seasick he hasn't been able to come in.
Ferro on vacation.
Yeah, he's a rock star, and he got so seasick he's had to recover.
Yeah,
that's what he's doing.
It's a long recovery too,
So Fu with us, which is a good and beautiful thing. I mean, we've got the Fed meeting coming off of, and we've got Apple today. Jobs Day tomorrow. We got some wonderful conversation here coming up on Bank of England in 29 minutes. Futures up 23. Dow futures up 121. Yields still come in. It's still a Jay Powell, we're done celebration. No other way to put it. 10-year yield 4.71%. Even dollar participates. A little dollar weakness, but I'm going to call it dollar resiliency. Euro 106.34. John Riding says if I don't quote sterling, he'll walk out in a huff. 122. On sterling. When John Riding started economics, it was 4-1. Something like that. It's Churchillian. Under surveillance today, and of course, on a very serious note, the President of the United States, as Anne-Marie Horton said, out in Minnesota, asking for a pause to the fighting in Gaza for hostages to be released, but stopping short of asking for a full ceasefire. Today, as many as 400 Americans could leave Gaza after the Rafah crossing on the Egyptian border opened for the first time since the October 7th attacks. Apple, we're going to just touch on this right now. Apple set to report earnings after the closing bell today. Investors will be looking for Scarlet Fu's brand new iPhone 15 sales, keeping revenues and cash flows going. And of course, there's a huge mystery to China. You're going to do this with Catherine Greifeld. You've already read in on this. What's a single thing you're looking for on Apple?
Well, obviously iPhone sales and iPhone numbers in the U.S. versus China. So the contrast between these two markets, the most important markets for Apple. I'm
going to look at the financials, and I went in and looked at the Bloomberg Professional Service. You can do this under the FA screen. How about this? Back to 2019, Apple sales, their revenues are up 47%. And there's a lot of other companies that have done really well at this, but their free cash flow is up 71%.
They have a lot of firing power.
The business leverage. This isn't in the CFA agenda, the curricula rather. I mean, this is absolutely extraordinary.
Actually, Catherine Greifeld, who we gave a shout out to, wrote a great story about how some of these big tech companies with their massive free cash flow and their massive cash holdings are benefiting from higher rates because their interest income is rising in this kind of environment.
A lot of mail. I'm so sorry, folks. Ferro's not here to drive forward Premier League and the rest of English football. Let's do the baseball story first, and we'll get to the real story with John Riding. Texas Rangers, they spent a lot of money. They're World Series champions after defeating the Arizona Diamondbacks. Game 5 last night. That's 4-1, and that's sort of a quick World Series. The Rangers held on to a one-run lead before driving in 4 more in the 9th inning. That's the end of the game to help clinch the series. It's the team's first ever World Series title.
Baseball has had a renaissance this season. Have you seen any games?
Yeah,
yes, with the clock.
I followed
massive.
it a lot. The clock was really, really good, but I tried like 3 or 4 times to get into this World Series, and I went down in flames.
Well, maybe if Shohei Ohtani was in the World Series, you would have watched.
I think that's important. And, I talked to Julie Swinert up at the Red Sox, and I just said, tell John to unload the checkbook. And let's get this guy into Boston.
Everyone wants him. New York wants him, too.
Give him the monument up at Bunker Hill. I give him something to get in there. Right now, we're going to start with football here because there's a lot going on. John Riding joins us with his experience at the Bank of England, his experience at the Federal Reserve, his experience at watching a Fed manage the message forward. But I'm sorry, I have never seen the distress at Manchester United, a publicly traded security, that I see now. In our youth, they were dominant, Alex Ferguson and all that. What's happened to Man U?
Well, I'm going to get a lot of hate mail if I
That's why I'm asking you, not me.
really give you my true views on Manchester United. As a Liverpool fan, Manchester United are the sworn enemy. And so it's really just a difference in philosophy. You could liken it to corporations. Like, do you manage for the long term and have someone who develops and grows, which is what Liverpool have done, or are you throwing cash? The amount of cash that Manchester United has spent over the years, but not developed a team that more recently that's coherent and wants to play together and wants to put in 110%.
The Texas Rangers won the World Series, and the pros in baseball say they did it by opening the checkbook. Newcastle opened the checkbook, right? The Tots rebuilding here with John's wonderful interview with Daniel Levy, they opened the checkbook. That's got to be the future of English football, right? Big people with open checkbooks.
Well, some people might wonder where some of that checkbook money went after the VAR decision that ruled out Luis Diaz's offside goal.
You are correct.
But anyway, just one thing, just to say, I'm old, I know that, but the pound when I studied I remember the devaluation from 2.8 to 2.4 dollars per pound, not the old 4.86 that was around in the 1920s.
Let me talk about this in segue here, from the wild spending of sports to what I perceive as the austerity. I got a Bank of England meeting here in 25 minutes. We know a couple years ago they chose austerity. We clearly chose stimulus in America in the pandemic. Is the backdrop here a United Kingdom and a continental Europe that are fiscally austere and they should have had stimulus like the United States?
Yes, and in the case of the EU, they were obviously remain constrained by the sort of German philosophy towards fiscal spending, and they have deficit and debt limits that are frequently broken under the Maastricht treatment. Look, the U.S. did the right thing in the midst of the pandemic with the fiscal stimulus. They did the wrong thing in not exiting or winding down the stimulus, but piling on. Now, I don't know how many of the viewers and listeners may have remembered the old diagram, which was guns or butter, which talked about the trade-off that an economy could deal with in terms of allocating resources. But now we want to have guns and butter. And there's this sort of war stimulus, and as a result, the fiscal load on the economy is what has been pushing up yields. And the Fed is in a position where it's going to have to keep rates high.
This is so important, and Bill Dudley brought this up on the Fed Decides yesterday. He was heated that we were seeing elements of Lyndon Baines Johnson and what we saw in the 60s, where we wanted guns and butter from another time.
I can't wait to read the next opinion column with guns and butter mentioned in it. John, I got to ask you, the Bank of England expected to keep rates unchanged, holding it at 5.25% for a second straight meeting, although it will take the opportunity to perhaps warn that it could tighten again if progress on inflation stalls or even picks up. How will that warning sound different from what Jay Powell and the Federal Reserve says?
Well, there's a difference. The Fed moved very rapidly in 2022 once it realized its mistake. And it has established positive real interest rates and restrictive policy. It is less clear to me that you have restrictive policy in the UK and also maybe even in the EU, because positive real interest rates haven't been established. So the Fed's in a position where interest rates are above the inflation rate, and in the latest Fed phrase, they're in a position to proceed carefully, which means not proceeding at all. They can just keep rates here. And I said ahead of the September FOMC meeting, we're now in a position where the Fed is going to substitute time for higher rates. They're going to spend more time at a higher rate than keep having to raise rates. It's the third phase of monetary policy. And eventually there's going to be a fourth phase where the Fed starts to plan how it brings interest rates down. But in the case of the Bank of England, the Bank of England's and the ECB to some degree are on hold in the hope that inflation is going to come down and they don't have to do more. But I'm not sure that either of those central banks have done enough.
And of course, the members have that skepticism as well. We're looking for a vote split for the BOE decision. Why is that significant? I bring this up because we make a big deal if anyone in the Fed votes the other way.
It's actually not significant because the Bank of England frequently can have decisions that go 5-4. I even believe, if my memory serves, there was a rate decision where the governor of the Bank of England was on the losing side of the vote. So the Bank of England doesn't have to come to this groupthink outcome. The Fed operates much more on consensus, and a dissenting vote, unfortunately, has become a rare thing.
Yeah.
And if you were to have two dissenting votes going the same way, it would almost be like a palace coup, a rebellion, a mutiny, as it were. But that, I think, is unfortunate because we need more diversity of opinion.
Diversity of opinion is good. What is the BOE's mandate versus the ECB's and the Fed's? Because the Fed has a dual mandate. We know that. The ECB is to tackle inflation, and that is its sole focus. Does the BOE have another official mandate?
No.
Does it have an unofficial mandate?
Well, there's two parts, right? There's the monetary policy part, there's the financial stability part. But on the monetary policy side, they're like the ECB. It's a 2% inflation target.
Okay.
And in theory, if you breach that target, then the governor of the Bank of England has to write a letter to the Chancellor of the Exchequer, which is the UK's Treasury Secretary, to explain why the inflation target was breached. Now, there's obviously a lot of writing of letters going on, given what's happening to the inflation rate. But in reality, whether you're a dual mandate central bank or a single mandate central bank, you're really managing both. Like in the U.S., I've seen a welcome development where now Jay Powell says it all the time that you can't have lasting prosperity at maximum employment if you don't get price stability first. And that is a change from where the Fed was back in 2020 when it adopted average inflation target and said, we're not even going to raise rates till we're at full employment.
I got 40 seconds left. I thought a lot of the questions yesterday were really weak. Mike McKee was brilliant. I thought Leisman was brilliant with CNBC. What was a question that wasn't asked that you would have asked Jerome Powell?
I was hopeful on a follow-up question when he was asked about R-star, the neutral rate. Why do you maintain this view that the long-run real interest rate is only 0.5% when it's at nearly 2.5% in
Gina
the market?
Smilek, I think,
and when he says, well, we don't know, there's a lot of uncertainty around it. Well, why have that number at all? Because it's a very precise number that's very different from where the market is. And there's no explanation as to why that is. And
you realize
if
you were in the press conference, Michelle Smith would never pick on you. You just sit there and at the show, go like, well, how did Riding get into the press conference? John Riding, thank you so much. Iconic at Bear Stearns with bringing capital this morning. The Standard & Poor's 500 rallies up 0.6%. And we say good morning. Scarlet Fu, double duty, in for Bramo, in for John Ferro, as well as we slide off to the Bank of England. I think the stimulus issue is so important. My summer book was Olivier Blanchard's Short Effort on fiscal policy and how it folds into the monetary stew that we have. And he just flat out called the third stimulus the Biden stimulus. Repeatedly.
That's what you read for the summer?
Yeah, I have no life. I mean, it's
wow.
Don't ask me what I'm reading now.
I'm not telling you what I read. It's
paint dry.
It's been a long time since you and I have hosted Surveillance together. I had to go back in the photo archives to really check when the last time we did this was. Late 2014, early 2015, and we took a photo to mark my last day on surveillance.
Did we?
Here it is.
Oh,
I think this must be
word.
a hotel bar of some sort at 10 in the morning, maybe 11 in the morning.
Yeah, that's, it's probably, we were, celebrating.
That was back in the day of lower forever, zero interest rate policy. Remember that?
It was lower forever. John Riding was talking about moving the putting green. You're out on the golf course and you can't find the flag. John Riding, where's the putting green right now? Where's the flag? You got a clue?
Well, I think the Fed's right on a gimme at 5.25 to 5.5%.
They're there.
I think that's it. And we've been saying that that's it for a long time, that would be where we would end up.
Is that the peak or is that the Table Mountain?
It's a plateau rather than a peak.
Bob Michael emails in from J.P. Morgan and says, thanks for trashing Man U. He's a Liverpool fan, as well.
The hate mail is just beginning.
Yeah, well, good. We had to do something. It's in the agreement for the show. We have to do 4 minutes of English football every day or Ferro has a tantrum.
Here's my contribution. Did you watch the Beckham documentary on Netflix?
No, I haven't watched it.
It's a good one.
I can't keep up. Stay with us. Bank of England. Good morning.
Despite all these risks that you're talking about, macroeconomic risk, geopolitical tensions that you can feel all over the places, but still Hugo Boss is very strong at this moment. We are still expanding retail-wise. We still see a lot of opportunities in the American markets, especially in the US and the South Belt. In China, we see more potential. So we are growing our retail space. So especially in the metropolitan cities, big cities like London, Paris, Tokyo, Shanghai, New York.
Yves Muller, he is the Chief Financial Officer of Hugo Boss, and I just really can't say enough about this, the mystery of luxury, given what we see across this world. Speaking of luxury, Apple this afternoon, it's a luxury item. I don't care what you say. Bramo was in the store like a couple days ago and had to unload on the various cherubs, and I think they had to mortgage the house or something just to get out of the place.
They all got the iPhone 15 Pro Max.
Yeah, and there's like shades of luxury, and the optimists like Dan Ives at Wedbush would say, there's all this gloom about Apple, but like Hugo Boss or the others, the very tippy top product, the iPhone 15 Max or whatever, is going to be gangbusters.
It is gangbusters in the US.
I don't have an opinion on that.
Yeah, the big question is whether it goes gangbusters in China, and the early indications are maybe not, because people are going gangbusters for the Huawei Mate 60 Pro.
Some of the distinctions here of luxury, won't cover that. We've got a great team in London working on that as well. Market check, every time I look, it goes up. It's the foo phenomenon. Up 26 on SPX. I think we were up 18, 19 earlier, up 0.6%. We're going to get up a stick on NASDAQ 100. A little bit of short covering, Scarlett. What do you think?
Yeah, maybe, but it's more resilience after the. Did Powell say anything new? Maybe the fact that he didn't say anything new was what encouraged everyone.
Yeah, well, I think we'll just have to see. It's a hard thing for me. And, they called me up and they said, we'd really like you to go out to Hulu and do Dancing with the Stars. And I just said, yeah, but I don't dance. And they said, that's why we want you on. You're the comedy act. I mean, people are watching Dancing with the Stars or whatever on Hulu.
They're watching The Bear. They're watching all kinds of shows. I don't know. You have to pay for it. You have to watch horrible commercials. So it's not one of my favorite streamers.
What is their theme versus Netflix or Disney Plus? How do you, I've asked Ferro this because he loves Hulu too. How do you identify Hulu versus the others?
It's show by show, but it's also, they have shows from the past. So they have this library that you can access.
I'm looking for
It's complicated, though.
It's very good. We're going to get complicated here and straighten this out. Hulu being taken out by Disney. Brian Roberts and Comcast unloading the dog. Geetha Ranganathan of Bloomberg Intelligence is truly encyclopedic on this near $9 billion transaction. Geetha, I'm lost here. Is Comcast happy today that they unloaded this stock, or is this a deal of a lifetime for Mr. Iger?
So this is, as you just pointed out, Tom, this is a pretty complicated transaction. All that we got yesterday was that Disney is definitely buying out Comcast's 33% stake. So Disney already owns 2/3 of Hulu. So we know for certain that Comcast is offloading it. Disney is buying it. Now, the biggest question here is going to be price. So we know the floor value was set at $27 billion. Disney actually came out yesterday saying that they do expect to make that initial payment of, it's actually $9 billion minus some capital calls, which is why you get the $8.6 billion.
Right.
But really, the point is going to be how much greater than $27 billion is the valuation going to be, and that is where all of the complexity is going to arise over the next few months.
I mean, John Ferro's addicted to Hulu. He's just, he like binge watches Love Island USA and the rest of it. Geetha, does it matter who watches this stuff in this transaction, or is this just people distant from what we watch every day?
I mean, Hulu has 48 million subscribers, Tom, so it is a very, very successful streaming service. You're absolutely right. It has a very deep catalog of classics. It has
like
also
Love Island USA. Geetha, you're not going to sell Surveillance's audience that Love Island USA is a classic. Continue.
Well, it has a lot of the must-watch shows, right? You brought up The Bear. Only Murders in the Building is a great show. It has a lot of shows that come up from broadcast TV, so it's a great catch-up service. And it also has kind of this live Hulu plus live option as well. So there are a lot of different flavors that it offers. But I think the biggest thing for Disney is really the ad component of it. If there is any streaming service out there that has got advertising right, it is Hulu. We know that Netflix is struggling with that right now. So is Disney Plus. So are a lot of the established services. Amazon is looking to bring an advertising service. Hulu is the one established brand already bringing in about $3.5 billion in ad revenue. So that infrastructure is a gold mine and is super valuable to Disney.
And for that reason, Hulu is one of the few profitable streamers. Netflix, of course, another profitable streamer here. But what is it about the ad packaging that Hulu has figured out? As a consumer of Hulu, it's really frustrating to see the same Tom Brady Hertz commercial over and over again.
No, you're absolutely right. But at the same time, I mean, this is a company, obviously they are the ones that have ads, that have had ads on now for the longest period of time. They've built they've built a very, very robust ad stack. And they've also kind of made all these different, relationships with advertisers. Of course, you have the larger Disney brand as well at work there. But that is something where they've really been able to crack the code. I mean, Hulu is one service where you have majority of, the consumers on the ad-supported option, which is what has made it such, so successful in what it set out to do.
Disney says it has enough cash and credit to buy Hulu, whereas Comcast will be using the proceeds to accelerate its stock repurchase program. When this financial transaction is completed, does it move the needle at all for either Disney or Comcast stock?
I think it definitely moves the needle for Disney because this removes a key overhang. Remember, there are so many strategic questions that are still kind of pending for Bob Iger, whether it's the future of ESPN, whether it's the sale of the ABC network. And so, kind of just closing this deal with Hulu and then integrating it with Disney Plus, I think just removes a key overhang for the stock.
5 years out, do they mate? Do you see Hulu combined with Disney Plus to really take on Netflix as a combined adult and kids entity?
Absolutely. I think that is what the plan is. I mean, at the end of the day, they are looking to get synergies across the board in their streaming product because Disney Plus is still losing money. It is still going to lose about $2.5–3 billion this year.
Right.
But I think when you combine this, we're looking at savings of at least $1–1.5 billion. So I think it's definitely going to accelerate streaming profitability for Disney.
Synergy to me means rebundling. So you're going to have to pay some big, heftier price to get all these different channels or streamers into one again.
Yeah, that's what Paul Sweeney would say as well. What I'm fascinated by is when we're all said and done with this, I mean, there's Hulu and there's Disney Plus, and they're going to merge and they're going to take on Netflix. Geetha, do you see a true duopoly out there? Is that where streaming is heading?
It definitely is heading there, Tom. There's no doubt about it. I mean, Netflix is far ahead of the competition. They have almost 250 million subscribers. We do see them getting to 300 million over, maybe the next few years. But yes, this is kind of very much turning into, Netflix versus Disney versus most probably Amazon. So, yeah, maybe a duopoly, a triopoly.
Max?
HBO, that's a tough one. HBO Max is probably
brutal. She's just
probably going to be
nails.
a second-tier service.
Second tier?
Look at her. She's just like
wow.
What's so bad about that, and this goes with Discovery Plus and Max and all that, is where am I going to see 90 Day Fiancé?
I know you're addicted to it.
If it doesn't work out. Geetha Raghunathan, thank you so much. I think I learned something there on Hulu. I don't have Hulu. at home.
The Great is another
one day I was
one
trying
that
to
you should
figure out
watch.
how to give him my money, and I couldn't figure out how to give him my money. I just gave up.
They make it easy for you to give your money. They don't make it hard for you to give your money over.
I don't know. Have you ever added up all this streaming stuff?
No, I'm scared
versus,
to actually.
Yeah, versus
because
what
the list just goes
we
on.
used to pay?
I just realized that we have YouTube Premium as well so that my kids can watch YouTube without the commercials, without the ads. Which
I'm humbled
is
by the
outrageous.
collapse of Disney. I really am. I mean, Disney's what you bought your kids. You bought them 3 shares of Disney so they, you'd get a certificate with Mickey Mouse on it and put it in their
Well, Bob Iger is humbled as well. He's got a lot of work to do this time around.
What does he do with ABC? I mean, that's like a TV network.
He's looking to sell it. I don't know who's buying right now.
Who's buying it?
Yeah.
Who do you? I think that's a key idea here. It's sort of like American housing. You got to find somebody to buy this stuff.
Everything's frozen in place right now.
Yeah. Well, that's.
We have a lot of data coming up. Did you know that? In just over 30 minutes.
In 4 minutes, we have Lizzie from London.
Bank of England decision.
Bank of England.
Yeah, it's probably going to be a bit of a snoozer. No change to the rate for a second straight meeting.
She
Kinda like the
stands
Fed.
out there in front of the Bank of England, in front of the gorgeous, whatever it is, the famous building there. She gets a more British accent when she does that.
Oh, I see.
It's very British. I don't know where she is now, if she's in the office at Queen Victoria Street or not.
I did hear her say "boot" and "kut," and I can't
I have
imitate
no
it,
idea.
but-
It's like Ferro. About every fourth word, I'm like, what? What did you say, John? The Bank of England, it is coming up. It is not a routine matter. We do this with futures advancing, up 24. Good morning.
We're going meeting by meeting. We're asking ourselves whether we've achieved a stance of policy that is sufficiently restrictive.
Clearly what the market saw was a preference for the worry of tightening financial conditions. We're at sufficiently restrictive. We can be done.
If I were recommending or talking to Jay Powell, I would recommend that he leave the door open.
Our concern is sort of around May and June, where is the Fed going to be?
It's unlikely that 1 quarter point move is just going to be sufficient to do the job. So I think it's either 0 or multiple rate hikes.
This is Bloomberg Surveillance with Tom Keene, Jonathan Ferro, and Lisa Abramowicz.
Bloomberg Surveillance, Jonathan Ferro, Lisa Abramowicz, and Tom Keene. We need Ferro now. He's lost in space somewhere. Bramo's out today. Scarlett Fu and I are here. We're looking at Bank of England. We don't know the headlines. We're going to go to Lizzie Burden in a moment. But what you need to know is sterling advances off the headlines. And there is Governor Bailey. Scarlett, it's just simple as this. Bailey, much too early to be thinking about rate cuts.
Yes.
That's in English.
Similar to what Jay Powell had said as well. We're not even talking about that. We're not even thinking about that.
They're the headlines this morning here, and of course, market reaction. We still see U.S. futures sustain, but sterling 121 goes to 122. We need help with this, and the best help we can have is Lizzie Burden in London. Lizzie, I'm lost in translation here. This seems to be a strident Governor Bailey this morning.
Well, Tom, the Bank of England has done what was expected. It's held rates, as you say, at 5.25%. So they had been guiding that we were at the top of Table Mountain, this flat peak where rates are going to stay, and it looks like we're there. The vote split was expected to be 6-3, and indeed that is what it is. It was 5-4 last time. And really, the market has been looking for any reason to take this as a dovish hold. You mentioned the pound. It's actually stronger against the dollar off the back of this, stronger 0.4%. If you look at the market reaction, you've got the 2-year gilt yield down 5 basis points at 4.74%. Andrew Bailey has made it very clear here that it's far too early to be thinking about rate cuts. So really echoing Christine Lagarde there,
right.
It's premature to be talking about cutting now.
And Scarlett, what we saw in Europe as well, the Bank of England cuts their GDP forecast. And this is critical for Q3 when the U.S. had a blowout quarter, but for third quarter and fourth quarter this year. So you're doing this into a more tepid economy.
In fact, the BOE also sees a 50% chance of a UK recession in its forecast period as well. Lizzie, there's always accusations of groupthink at central banks, and you mentioned the vote split this time around was 6-3 versus 5-4 last time. Clearly, you can make the argument that there isn't groupthink at the BOE. How does that show up in policy?
There really isn't at the Bank of England, and you can expect that the vote split actually masks a little more of the debate that's happening over on Threadneedle Street. The internal members tend to vote together and they flock towards the hold camp, but perhaps behind closed doors there are fiercer arguments going on. We know at the hawkish end of the spectrum you've got Catherine Mann, who's been really warning about inflation expectations. You've got Swati Dinger at the dovish end, but interesting that she isn't voting for a cut yet. The market really would have seized on that as a dovish signal.
Lizzie, I want to go to this with Sri in a moment, but let me ask you as well. Is there a sense of stimulus by the United Kingdom government, or are we drifting into an austerity that we knew of a number of years ago?
You might say we're already there. We've got the highest tax burden in the post-war period. The pressures on the Chancellor, Jeremy Hunt, to announce some tax cuts at his budget this month from inside his own party, and it's going to come from the press as well. We've got an election on the horizon. What's interesting about these forecasts from the Bank of England, you mentioned about potentially a recession on the horizon for the UK. Mm-hmm. What's the Chancellor going to hand out to the economy between now and then? Is he going to give some tax cuts, but at the same time cut public spending? So net, it's pretty much the same.
I was stunned in London there a couple of weeks ago, Lizzie, to see the debate that we saw on the health service as well. Lizzie Burden at Queen Victoria Street here with the Bank of England. A little bit of a strong sterling, 122.12 right now on cable. What a joy to see her in London. Sri Kochagovan joins us right now, senior research economist at Aberdeen. Sri, I'm absolutely fascinated by how the U.S. stands alone, how Jerome Powell yesterday stood alone with massive stimulus leading into massive real GDP. Does the United Kingdom, where Governor Bailey stands now, do they need stimulus to keep it going?
I think stimulus would probably not be a good idea at this point. Really, what we want to tackle is inflation. Now, the Bank of England have a very challenging backdrop. Growth outlook is weakening, but we still have very elevated inflation pressures. Now, inflation is past the peak. It has started to decelerate. However, energy costs are still quite elevated. The headline inflation is still very high. And also we have, even though those commodity price base effects will start to unwind over time, we still have very sticky core services and wage pressures in play. So stimulus right now would not be a good idea for the UK. Now, it's not restrictive fiscal background at the moment, but further stimulus would actually not be helpful for the Bank of England.
Here's a fun fact from the Bloomberg News story that Lucy White wrote for us. Ben Bernanke actually attended the Bank of England's meeting as an observer. It's part of his review into the UK Central Bank's forecasts and communications. And of course, this comes as Bailey has faced some criticism that they didn't move quickly enough to respond to inflation. Sri, can you compare and contrast the efficacy of communication at the BOE versus the Fed?
I think, as we mentioned earlier, there was a conversation about groupthink. There is a split within the Bank of England, and I think the communication has been quite clear from the various members. We've had the arguments for staying on hold, the arguments for perhaps an additional hike, and all of those are quite consistent actually with the data that we're seeing. But it seems that on the whole, we are witnessing a switch towards a focus on growth and the weaker activity data, and some greater faith in terms of inflation actually past the peak and decelerating from here. So we're also seeing so we have a signal from the split in the vote, and we also have that signal very, very clear in terms of rates are going to be on hold for a meaningful period of time, even if, as we expect, the economy enters a recession. Rates are going to remain quite elevated. And that's quite a burden for small companies in particular, who are much more sensitive to the rate cycle. They are facing a profit squeeze. There is a bit of an issue there in terms of future business investment. And so there are a number of challenges there, particularly for the smaller firms. So that's something that the Bank of England are going to have to really be wary of.
Yeah, credit availability for small firms always an issue, whether it's stateside or across the pond. Sri, when it comes to the stimulus versus austerity debate that Tom was referencing, how does the Bank of England's decision to keep rates on hold for a second straight meeting and warn about a possible recession, warn about the need to perhaps raise rates in the future if inflation reaccelerates, how does that restrain or limit the government's options when it comes to supporting the economy?
I think the government is also very aware, and we have heard from Rishi Sunak, the Prime Minister, we have heard that there is a focus on inflation, even within the government. Yes, they do have an election coming up, but they're worried about stimulus too soon and too much stimulus too soon. So I think they're going to pare back on any measures that are going to fuel inflation further. I think that's also a concern from them. Again, a very challenging decision for them, given that there is an election on the horizon.
Right. Sri, are all the gains in the United Kingdom focused on London? I mean, is it like, the dominance of Paris and France? Are all the economic gains, which, have been tangible here, have they been focused on the south of England?
Well, there has been a big debate for a number of years with regards to the regional disparities. And that was something that for a few years there have been some focus on what are the policies that can help level up the economic outlook. However, it has been quite challenging in order to do that with the pandemic, recovery from the pandemic. And I think the leveling up policies may be, they're on the horizon in the future, but right now, really, the focus is quite narrow. So that regional disparity, unfortunately, is still very much there.
Sri, thank you so much. Sri Kochagovadan with us with Aberdeen this morning. Here in the Bank of England, they lift sterling. That's a short way of looking at it. And Scarlett, it's real simple. They lift sterling because Governor Bailey, even I would say more stridently than what we heard from Jerome Powell, just on first quick glance, says, no, we're here, we're happy we're here, and we're going to stay here.
All right. I just can't wait for him to say Table Mountain again in the news conference.
Isn't that like South Africa? It's like, I think so, isn't it?
Table Mountain?
Yeah. I think that's like Alan Ruskin is from South. He would know. I mean,
we'll ask him.
We'll ask him. 122.16 here on sterling. That is an advance there this morning. And I really want to say here, folks, like if you look at the 30-year bond, John and I were going back and forth 10 days ago or so on the elasticity, the movement of the UK 30-year bond. The gilt was much more elastic than what we saw in the United States. The United Kingdom yields, let's do the 2-year comparison, 4.75% in the United Kingdom, and it's 20 beeps higher, 4.96% in the United States only. I mean only, and you can only do that on the Bloomberg Professional Service.
I know, that's why
do
we
an
need
immediate 2-year compare and contrast. She mentioned core services, and that really didn't come up yesterday, I believe, with Chairman Powell. But that's the heart of the discussion, is people are waiting to see in each economy what services do, and Mike McKee's definition of core services.
Yeah, that was great. He stumped Jay Powell with his question. It was very nuanced, and
yeah.
I think at one point I saw Powell's eyes roll to the sky a little bit, thinking aloud. How did I end
don't
up here?
Disagree. Yeah, I don't disagree with that as well. Tomorrow, non-farm payrolls. Remember the surprise last month, 336,000. It'll be interesting to see how that's revised. But this week's statistic, the survey, is 180,000.
Yeah,
and any number of guesses. It's a drop off, but that's still a buoyant statistic.
Yes, considering where we are in this economy. Of course, before we get to the non-farm payrolls number, of course, we have jobless claims in about 15, 20 minutes. That's slated to come in unchanged at 210,000. We've also got factory orders for the month of September.
We do.
2.3%. That is an acceleration from the previous month.
You only need one statistic. The Standard & Poor's 500 up 29 points, up 0.7%. We say good morning, Scarlett Fu, doing double duty, in for Bramo, in for John Ferro. This has been fun. We haven't been together since Nixon was president, and that's good.
The last time we were together on air on surveillance was ZERP.
What is amazing here is, and I've said this for years, Scarlett Fu's celebrity lodestone, and there's another headline: Walt Disney, ESPN bet to debut with planned launch. I have no idea what that means. It's a newly branded online sports book.
It is with Penn
for
Gaming.
fans in the United States.
It's a partnership that they made with Penn Gaming, which I think struck a lot of people as curious because Penn Gaming's brand and Disney's brand, it's kind of a disconnect.
What is Penn Gaming? Help us with this.
I mean, I know it basically as the Barstool guy. Was part
it's
of it.
The Barstool
yeah,
guy.
Dave
Okay.
Portnoy. But now he's
got
out
it.
of that whole thing because of this transaction with Disney.
I miss Bramo. I mean, we could never have this conversation. With Fu, we can do this.
You could be talking about soccer with John Farrow.
I learned more about Hulu today than I've learned in like 15 years as well.
And The Bear. That's what we need to watch.
The Bear is the show I have to watch. Okay. Thank you, Scarlett. It's good to
anytime.
know that. If we keep talking, the market's going to go back to Dow 36,000. We're up 31 points on SPX, up 0.7%. NASDAQ well out over a stick. That's important. NASDAQ 100 up 160. It's a melt up. I mean, that's all there is. Triple leverage cash. I'm enjoying it this morning.
Dow futures really took a leg up and has continued to build.
Triple leverage cash is king. I'm not buying. Should I buy an odd lot of Apple today, like 2-3 shares?
No, stay with your 5-6% yield in cash.
It's great. Well, yeah, but it's netting out 12.67% this morning. That's good. Apple this afternoon. Greifeld and Fu. Good morning.
Last month's jobs report caught everyone off guard.
Major upside surprise on the headline number.
Considerably stronger than people thought.
Almost twice as much as what the expectation was.
This Friday, Tom, Jonathan, Lisa, and Mike will bring you crucial data and expert analysis at terminal speed.
Rates are going to have to stay higher for longer, potentially even go higher.
Can there be lasting damage here?
Those cracks are starting to form.
The October jobs report, Friday on Bloomberg Television and Radio.
Going meeting by meeting, we're asking ourselves whether we've achieved a stance of policy that is sufficiently restrictive to bring inflation down to 2% over time. That's the question we're asking. We're looking at the full range of economic data, including financial conditions and all of those things that we look at. We haven't made any decisions about future meetings. We have not made a determination, and I will say that we're not confident at this time that we've reached such a stance.
The chairman of the Federal Reserve System, Jerome Powell, yesterday, and he's really gotten much smoother at these press conferences. There's a real huge value add and clarity there. I thought, Scarlett, that yesterday he read the least off pre.
Well, he had a teleprompter apparently.
Oh, he did?
Yes,
I didn't
he had
know
a
this.
teleprompter.
He's cheating now. He's like Lagarde.
Well, no. I mean, are we cheating? Are you cheating when you read off the teleprompter?
Every morning. Yes, thank you. But the answer is, so he had a teleprompter instead of looking at a piece of paper.
Yes, I think the last meeting he was using an iPad, and so there are a lot of people commenting on that.
Yes,
and
like
then,
me.
Yeah, this time around he was using the teleprompter,
Okay.
but I don't think there were any notes to help him when Mike McKee asked his questions.
Scarlett, yeah, that's true. Scarlett Fu with us this morning. Bramo and Ferro off today. Well-deserved rest here. Sliced in between a Fed meeting and jobs day tomorrow and Apple this afternoon. I really can't say enough about, not so much buy, hold, sell, but the importance of Apple as a statement on a post-pandemic recovery. And Scarlett, you've mentioned this with Apple. I mean, the massive China mystery that's out there, tangible.
Whether people are buying the Huawei Mate Pro 60 instead of the Apple iPhone, Beijing has already made its preferences clear that the government is not going to welcome use of foreign smartphones, notably Apple, and that's the case for state-owned enterprises as well.
We'll have to see. A diversity of opinions. We're going to touch on this here in about 30 minutes, so stay with us on Apple here in a bit. All I can say is Fu shows up and the market goes up. There's none of the Bramo cam showing us some gloom, up 31 points. Standard & Poor's 500, we're getting near 4,300 there, up 0.7%. NASDAQ up a full stick. That's interesting, getting near 15,000 again. It is some form of melt up through the recent resistance of everybody's different moving averages. 2-year yield well under 5%. Huge rally there of price up, yield down 4.94%. And Scarlett, I go to the inflation adjusted yield. Wow, look at it. I just looked at it, 2.27%. That's come in 13 huge basis points on the 10-year real yield.
Every time you talk about the 10-year
hours.
yield or the 2-year yield, for that matter, it's huge moves. It's gotten so that we're pretty accustomed to looking at double-digit basis point moves and not thinking twice about it.
We'll have to see on the melt-up, but more importantly, the why of the melt-up and the what to do about it. With a brilliant research note from Merrill and Bank of America Private Bank is Chris Heisey. We're thrilled that he could join us today, their Chief Investment Officer. Chris, buried in your note is the heart of the matter. Larry McDonald, among others, say there's a wall of money out there. You call it new money. What is the new money going to do?
The new money is going to go exactly where the data wants it to go, and that is still a big bookend. You talked about before the short end of the curve. I mean, 5.5% at the short end of the curve. 2-year yields over 5% now, back below them, and then a longer duration asset. You know, people are looking for opportunities to come back into equities. They're sliding up a grease pole to a certain extent because we're starting to slow down. We're starting to see the financial conditions bite, and yields are now cresting at the back end. They're coming down the short end. And everybody wants to know who's going to ring the bell when it says, is it soft landing or is it a recession?
But Chris, you know the equity market gets out front about 6 months. I mean, what's the Bank of America write-up for year-end review to get me out to Q3 of 2024? Is this where you take new money and acquire with courage sectors for next year?
Well, I think next year, we're starting to call it in the Chief Investment Office the foundational year. What does that really mean? For those who've been out of the equity markets, lending themselves into next year and looking at both fixed income and equities, you should have 3 or 4 rebalancing opportunities between this past week and the weakness that we saw over the last 2.5 months, and then all the way into the middle of next year. Why? Because you're going to see some weakness in the earnings revisions because of a slowing economy. But then the bond market should start to normalize in the second half of next year, where you have dare we say, an upward sloping yield curve. And then the real profit cycle, when I say real, the longer term new profit cycle begins to start later in 24, 25, and 26. And as you said, Tom, equities will discount that. So sometime between now and mid next year, you'll have 3 or 4 real deep opportunities to rebalance portfolios to get back up to your equity benchmarks. And since fixed income hasn't performed well at all, fixed income as well.
Chris, I want to ask you about healthcare in particular. We had Novo Nordisk report earnings this morning. And of course, Novo Nordisk, the maker of those weight loss drugs, which Katie Greifeld calls the AI of healthcare because of its ability to disrupt everything, not just the healthcare space, but all the tangential industries as well, the adjacent industries. How are you thinking about healthcare and going in there with these weight loss drugs changing up the scene?
Well, Scarlett, you hit it on the head, disrupting. And there's once every 10 years, there's a giant disruption. It's like an umbrella in the technology stack. It doesn't have to just be in the technology sector, as you've mentioned. The healthcare sector has always been a disruptor, but it's been very narrow. It hasn't been across the board. Industrial's the same thing. Communication services and technology has been largely the disruptor across those sectors. So what we've seen recently is that sectors are a mixed bag everywhere. Energy's got great free cash flow. Healthcare's got some disruption, some yield, but it's also defensive. And when yields go up, it starts to sell off. Utilities, the same thing. So we have to go down, and I think you hit it. We got to go down to the industry group level and then actually at the stock level. Once again, kind of like the 1990s again.
Chris, are you telling me to rebalance Apple? Are you telling me to rebalance Microsoft?
I think in the technology sector itself, the ones that have been working, it's because they have big moats, they have cash, they're earning 5% on their cash. In some cases, they're earning more on their cash than a lot of companies in the S&P have in total earnings. So those are moats, those are viewed as high quality. Well, I wouldn't get overly exposed to that. But in terms of being at least benchmark weight to the tech sector, I think that makes sense.
Chris, thank you so much for the brief. Chris Heisey with us with Merrill and Bank of America Private Bank here. Again, futures up 31. It has been just a persistent vault of people getting into the market here in front of an opening an hour and 7 minutes away. The VIX, wow, we're going to get a 15 before the end of the show, 16.31. We may get a 15 before the close this afternoon with Fu and Greifeld. While we were talking to Chris about American equities, this is off your radar. The pros, they've got dollar yen and they've got euro dollar. Take out the dollar and you've got this strange thing, which is 1 yen as compared to euro. This is euro yen.
Look at that.
Moments ago, printing a 160. And out of the pandemic, this is a strategy of reflation in Japan. 10 years from now, every economist, every graduate student will be thinking about this as they write a PhD thesis. This is extraordinary. It's broken. And what do you do with euro yen 160?
What do you think Japan is more concerned about, euro yen or dollar yen? I mean, 150 is kind of the line that Japan watches for in dollar yen.
They're concerned about flows.
Is there a level?
I think they're concerned about flows, and it can be not only the flows of currency and a hugely active Japanese people in moving money in and out of the country. So there's the flows, much more than interest rate dynamics, which is where it comes from. I get that. High interest rates here, low interest rates there. But it's the flows, but it's also, as was mentioned yesterday by Enda Curran, I think this is really important, it's also trade flows, in that we get it. Weak yen, they sell more Toyotas. Mm-hmm. That's what we were trained. But just as importantly, weak yen, they've got to import tons, like, I'm not kidding, tons of stuff into Japan.
Starting with food.
Ever more expensive as well. So that's an important note. One more reason to pay attention to Yvonne Mann and what we're doing in Hong Kong with Bloomberg's effort in Japan and across all of Asia. Futures, what can I say? They advance up 31. Jonathan Pingle, UBS here, before an American jobs report. It's Bloomberg Surveillance. Bloomberg Surveillance, Jonathan Ferro, Lisa Abramowicz, off. Thrilled that Scarlett Fuca darkened the door. We're a lot of fun with photos.
Right in the door. Right in the door.
Darken the door, whatever. But, you know, we're having photos and we're looking back down memory lane and all that. And what we know and what has been constant from when Scarlett and I were together years ago, the dirty little secret is Michael McKee's the one who really runs the ship.
We rely on him.
You know, you forget about fancy people in bow ties and food doing or celebrity stuff in the Rangers. McKee drives a ship, and let me tell you, from his question yesterday at the Fed, where once again Chairman Powell said, can he just observe? Bernanke was observing at Bank of England today. Bernanke was observing. Maybe McKee can observe at the next press conference because he changed the dialogue yesterday. Joining us now with data here, claims, and a few other things like productivity, Michael McKee.
Yes, let's do claims first because not a lot of change here. It was 212,000 last week. This week, 217, so a slight increase, but nothing that's going to tell Jay Powell that the labor market has gotten particularly looser. The productivity numbers are really interesting.
Yes.
Non-farm productivity in the third quarter up 4.7%. That follows a 3.5% rise. Now, this is with all the strong hiring that we've been doing. So it does suggest that the economy is able to withstand high interest rates and the inflation rate where it is. And this is the kind of thing we haven't seen basically since the 1990s. Now, that raises the whole question of where you go from here. But unit labor costs only up 0.8%. Actually, I'm not seeing the minus sign. Unit labor costs fell 0.8% after rising 3.2% in the prior quarter. So businesses' margins should be okay. They can afford to pay us, and we're doing more work in return. So this is the good news.
I got to jump in here, folks, because this is so important. McKee nailed this yesterday with the chairman. Futures advance up 34 right now. NASDAQ up 1.2%. Yields come in sprightly here. 10-year yield in 6 basis points, 4.68%. Victory lap here for Bloomberg Surveillance, Mike McKee. I brought this up with Dr. Dudley yesterday, and I'm sorry, Julia Coronado's onto something here, Mike, which is possibly we have a gross misperception of advancing productivity or efficiency in America. How does this change the dialogue, Mike, in your world if we see good and better productivity?
Well, it obviously sets us up for a different kind of monetary policy going forward, and for the fact that we can afford to have the kind of wage gains that we have been seeing. And it's less of an inflation danger than the Fed would think. Now, this is 2 quarters where we've seen some really strong growth. Normally what happens when you see a productivity jump is you're coming out of recession and there are fewer workers, but they have to do more work. In this case, we're long out of the recession, and we've been hiring like crazy, so there's lots of workers out there, and they're just able to produce more. Is this the beginning of the AI trend as well, like the 1990s was computers? So a lot of questions out there about how long this can last and then what it would mean going forward.
So how does this set us up for the jobs report on Friday, Mike, where the non-farm payrolls, according to economists, surveyed by Bloomberg, expect 180,000 jobs added after 336 jobs added the previous month?
Yeah, well, we were all stunned by last month's numbers. I don't know that we'll get the same kind of surprise this time, but you can't rule it out. But 180,000 is still quite strong. The Fed thinks you need about 100,000 to absorb new entrants to the labor force, and they would be looking for a number around that level to suggest that the labor market is no longer tight. But right now, with jolts where they are and with the numbers that we have seen in many other indicators, including jobless claims today, you have to think that hiring remains strong. And Jay Powell was asked about this yesterday. The labor market is not reacting the way they expected it to. Nothing really is these days, but they can't really take the same kind of clues from it that they thought they could when they were originally raising rates and trying to figure out where they needed to go.
How do you read the unit labor costs? Because I was surprised, too, by that negative sign in front of the 0.8%. This is an unexpected decline in the third quarter, and these are preliminary numbers of unit labor costs, down 0.8%. The consensus estimate was for a gain of 0.3%. What does that mean when it comes to the real economy?
Well, if it is really that unit labor costs are falling, it's kind of hard to believe in the sense that we're seeing nothing but rising wage levels. But the unit labor costs can be a little bit volatile because a lot goes into it besides just wages.
Gotcha.
The other costs of running a business. But if they do, if they are lower, then obviously companies' margins can be higher and they can afford to raise wages, which is, of course, all very interesting in the context of the UAW settlements.
Michael McKee, thank you so much. Really look forward. Yeoman's duty here for Mike McKee over the last 3 days, finishing strong tomorrow on the jobs report. We're going to rip up the script right now. Futures up 33, down futures up 181. The VIX comes in ever stronger, 16.27. I'm going to categorize it as maybe a Thursday melt up. We can rip up the script with a gentleman that worked in the macroeconomic section at the Fed. Jonathan Pingle joins, of course, with UBS, their chief U.S. economist. John, I'm sorry, I got to go here. And Julia Coronado, ex-BNP Paribas Macro Trends, is way out in front in this. Are we completely misguessing the efficiency, the productivity, the technological advancement of America? Are we just flat out too pessimistic?
Well, I mean, it's hard to know what the expectations are, right? There aren't that many people as in the weeds on productivity, on the immigration rebound as Julia. And, I'll give Julia a lot of props since we were at the board together a long time ago. But I would say two things, and Chair Powell touched on this yesterday. One is, we have been seeing a pretty impressive rebound in labor supply, and that's been both a combination of a significant improvement in net international migration coming out of the pandemic, in addition to, some groups like prime age women punching out new all-time highs in their labor force participation rates. And, we've certainly been writing about that, and Julia's done a good job as well. On the productivity stuff, though, we do have to remember that productivity was incredibly weak as we went through the pandemic and immediately coming out. So we did have a fair amount of catch up to do. And when we look at sort of the longer run trends, after today's data, just mathematically, you are going to be a little bit above the longer run trend. So it is good news. But you're actually really still not that far from what we were seeing pre-COVID. But I will say together, I think it's right. We're seeing nominal wage gains slow, and some of that is these supply side improvements and unit labor costs dropping.
Right.
We were forecasting a 7/10 drop. That is the result of the slowness we saw in average hourly earnings combined with basically 5% GDP growth in the third quarter. So that's a good supply side story.
Tell me about core services. The chairman didn't talk about it much yesterday, but are we seeing a service sector disinflation to give confidence to an outright goods deflation?
We are. I mean, we've had some positive news on the core services over the last several months, but I would say we're sort of not out of the woods yet, right? I think that's one of the reasons Chair Powell yesterday, and Mike McKee did a great job with his, trying to pin the chair down on the objective versus subjective decision. But what we want to see is a little bit more slowing in the labor market in order to see more slowing in those components of inflation. Because if we look at the ECI, it does look like wage gains are still a little too brisk to be consistent with sustainable 2% inflation. So I do think the chair, and Mike was just saying this, they do need to get the labor market to slow here if they are going to achieve their mandate and restore price stability.
All right, this is clearly a big week for labor market data. You had ADP employment change, JOLTS, and of course, jobless claims this morning, unit labor costs, as well, and productivity. We know that the UAW has come to agreements with the automakers, but if you are a union organizer, and I'm thinking of the Actors Guild, for instance, that is still on strike, what is your takeaway from the flood of data that we've gotten on the labor market right now?
Well, the labor market's still tight, right? So, even, and I don't really think you need to look much beyond the unemployment rate at 3.8% to say, the nation's at full employment and markets are tight. And, you've got a point here where there might be some bargaining power for workers. The other interesting thing about a number of these strikes is there are a lot of non-wage issues at stake. You're talking about, the use of AI for the actors. You're talking about, the shift to electric vehicles amongst the UAW. And that's actually been sort of an interesting aspect where, a lot of these labor negotiations, it's not just about the wages, it's really also about sort of these changing industry dynamics that they want to protect their workers from.
So how does that show up in the data? How does that show up in the economy in what's measurable?
Well, we should definitely see the impact of the UAW strike tomorrow in tomorrow's data. The BLS released their strike report. Between the strikes, the big three, and Mack Trucks, that should be about a 30,000 job reduction in motor vehicle and parts assemblies employment. You'll see it in Table B and B1 of the employment situation release. So we should definitely see that weigh on the employment report tomorrow. But that'll rebound in the subsequent report. And I think the bigger picture is that you have put in place for some of these contracts, a return to things like cost of living adjustments, et cetera. So this should generally mean for these workers somewhat firmer wage gains over the next few years than would have otherwise been the case.
Jonathan Pingle, thank you for the brief, particularly there quickly on advancing productivity. He is with UBS, I love saying this, the Union Bank of Switzerland. Left standing of the three major Swiss banks.
Well, and now it's absorbed Credit Suisse as well, but that's not part of the name anymore.
And I am absolutely fascinated by productivity. First rule, folks, there's three ratios. There's a lot of moving parts. There's the numerator, the denominator, and as a core basis, there's six things moving at the same time. And that's where you hear Dr. Pingle simply saying, we don't know. And the answer is you don't know productivity. What's an Apple i15 going to do? Guess what? You don't know for 10 years.
Yeah.
You don't know for 15 years. And yet we're all babbling, this. But I'm sorry, the market's talking right now. The market's saying something here from 2 p.m. yesterday.
The market's interpreting it the way it wants to, but you're right. These are numbers, these are realities that we won't really confront for years to come.
30-year bond, 17 basis points from 5%, 4.83%.
The 20-year bond is already above 5%.
Excuse me.
It's been that way for a while.
A brief foo on the break, folks. We don't quote the 20-year bond. Even Bramo doesn't quote the 20-year bond. We've got an advancing stand. I'm going to cut you off. I'm done. I got the 20-year bond.
It gets my attention.
It's an afternoon thing. Standard & Poor's 500 up 38 points. The S&P is up 0.9 of a bull market percent. We say good morning, and of course, Fu's saving me because I really don't pay attention to earnings. Bramo's killing me on that, advancing the cause every day. Scarlett picks it right up. This morning, we got to go Apple today. We can get to that, but Starbucks to me and the Shake Shack duo combo, I mean, I'm sorry, it really states suppleness of adapting off of the pandemic, and they're coming back.
And it shows that consumers continue to spend.
10%. Look at that.
That is pretty incredible. Yeah, well, I mean, the same-store sales in the U.S. looking good, same-store sales in China also some momentum there, and I think that was a big worry point for investors in Starbucks.
Worst Starbucks I've ever been in, Washington, D.C., right by the Fed. Michelle Smith took me over there. Horrific burnt cup of coffee.
How much did you pay?
Oh, I can't remember. It was years ago. You know, I think it was Arthur Burns. Hordern has a tantrum. Have you seen the barista card in the Washington office? For those of you on radio, we're going to bring it in right now. This is the Anne-Marie Hordern barista card.
Is this for real?
Yeah, this is with union labor. It's amazing. And this is like for real, folks. Do we have this in New York? I don't know.
Everything's self-serve, and it definitely doesn't look like this.
She had a tantrum one day and said, I can't get a decent cup of coffee. And anything Anne-Marie does, they react immediately.
Oh, absolutely.
They don't give me
she calls the shots
day.
all day
long. But there
long.
it is. I mean, I think it's a New York idea. For those of you on radio, they got this high-tech, it's got syrups. Do you do the syrup thing?
I don't do coffee.
Yeah.
But, you know, I'm not one of the people who are helping Starbucks move up 10% in pre-market trade either.
Scarlett mentions Apple. This is must listen and watch on Apple. Pierre Ferragu will join us from State Street with Ferragu Caution this afternoon.
The power that Apple has to convince people that now that they own everything from the silicon to the hardware to the software is really reassuring customers that basically they're buying something that is in full control of Apple and not like before at the mercy of Intel silicon.
Carolina Milanesi, Principal Analyst, Creative Strategies there on Apple. Program note, Fu Greifeld this afternoon. They're going to tear apart what is a wonderfully clean press release from Apple. It's actually in English, and they'll be looking at this and looking at that. Could you just tell us early on what the cash build is at Apple?
It's going to be massive.
Because it's like an island nation.
Is. Yeah.
You know, it's like when does the dividend go up? Are you going to reinstitute the share buyback?
Yeah. I mean, they kind of have to with the amount of cash, or they buy something, but that's not Apple's style.
Yeah, well, Apple having a challenging 90 days here as well. Even with that said, and this is a really important interview, and particularly for your Apple bulls. We can have Apple bulls come out, I think, eyes at Wedbush. And you know the plot. The most articulate caution on Apple is, and he will always be for me, the gentleman from Bernstein. Pierre Ferragu wrote the black books for Bernstein on technology for years. Yes, he's got a fancy title, Global Technology Infrastructure at New Street, but the answer is once and forever, he will always own the black books over at Alliance Bernstein. Pierre, thank you so much for joining us. And you have been cautious on Apple. Is now a time to buy the shares after the lassitude that we've seen over the last 12 months?
I would have liked to say yes, Tom, but unfortunately, and the reason why I would have liked to say yes is because sentiment is very, very low on the name. 60% buy ratings and 40% sell and neutral rating for that name. It's very, very, it's as low as can be, I would say. So we've had like a very slow year, 3 quarters in a row in negative growth. We're getting back to positive growth probably on the guide, but it's just because we're hitting like the easier compare now. And so that slowdown, like the stock reacted relatively well to that slowdown. If you look at Apple stock, it roughly tracked the Nasdaq. So not much happened on the stock. And the reason why I wouldn't jump on board now is first, not a significant pullback. So valuation, you're still paying like a hefty premium for Apple. Right. It's partly justified, of course, for the quality of the franchise. But what happens next that really creates a surprise and gets the stock to work from here?
The heart
it's
of the
kind
matter,
of an empty list.
The heart of the matter, Pierre, is single-digit revenue growth. So I went back to the pandemic, and basically sales are up 47% from 2019. Yes. But the free cash flow generation off that is up 71%. In your caution, are you suggesting that formula they have of operating leverage, of generating EBITDA, of generating free cash flow is now broken given single-digit revenue growth?
No, I think it still works, but of 5% revenue growth, you don't generate as much free cash flow growth. So the way I like to think about it is out of between 3 and 5% revenue growth, Apple can generate above 5%, like 6-7% earnings, dividend, free cash flow growth on a sustainable basis through systematic buyback, through operating leverage, etc. So there is definitely a huge amount of quality there and a very strong balance sheet, as you just mentioned. So all that is worth a premium. When you look at Apple today, it's trading on 27 times, forward earnings. Standard & Poor's names who grow between 5 and 10% per annum, their overall economics are trading on 22 times. So you have a significant premium. So you won't have a valuation surprise out of this very healthy, very high quality model. And so when you own the stock today, you have to believe this premium is going to remain, which I think is fine. Mm-hmm. But you can't expect a sudden jump and a sudden increase in valuation multiple unless you have a new growth story. And that's where it's kind of difficult to expect that to come
right.
through.
The China part of the equation is not a growth story for Apple right now. Huawei's Mate 60 Pro getting a lot of attention, kind of stealing the thunder in many ways. And Apple bears will always point to the China demand for iPhone 15 as a reason to not be optimistic. How does Tim Cook frame the negative headlines that are hitting Apple out of China, whether it's the Mate 60 Pro or whether it's Beijing's ban of using foreign phones for government workers or at state-owned enterprises?
Yeah, so I think it's a very good question. It's a source of concern. Interestingly, I don't think it's going to materialize that quickly because the new Huawei phone is really in early innings. They probably don't have a strong case to be that competitive against the iPhone. But it's true that in this jump you mentioned since 2020, Tom, a lot of that was Huawei getting out of the picture in China, and Apple really gaining about 20 million extra units, iPhone units, combined with an increase in ASP. And so that part of the business, I think, is kind of at risk over the next couple of years because China might be able to pull together an alternative to the iPhone. The iPhone remains an exceptional product. The only phone at a 3 nanometer manufacturing node for the main chip, exceptional quality, exceptional integrated software and hardware, etc. So I wouldn't say the Chinese are going to put out a phone that can compete with the iPhone, but we know that in the past, about 20 million phones were selling at Huawei, and when Huawei disappeared, that market seemed to have moved straight into Apple's hands.
I see.
And that's a concern, of course.
So how about Apple and AI? I mean, Apple was kind of left behind when ChatGPT and all the other AI tools, took over the zeitgeist. I know Apple's working on things with relative to Siri and how it can incorporate more generative AI into its products. Is this something that has reached a point where investors can model it?
No. So I think on the business model of Apple, who is making all its profits from selling hardware and then selling mostly subscription services over this hardware, the kind of magical one trick where you can charge $30 a month for a generative AI-based service, that doesn't really exist. The way I see it is that for Apple, generative AI is going to be more of a defensive move. Siri has never been exceptionally impressive in terms of what it can achieve in terms of voice recognition and user service. Apple is going to continue to do their best to enhance the overall user experience with generative AI. But I don't see that as a revenue enhancement for them, as it could be for like a Microsoft or Google and Meta on advertising and things like that.
Pierre, do you, just to finish here, is Apple such a dynamo, like you were mugged by your kids to go in and buy more toys, like Brammo, like Fu, like Keene? I mean, we're all in the same game. Are you suggesting that this is a stock that treads water for 5 years, or are you actually looking for a diminished share price?
So that's, I think, from here over the next 5 years, I think that's a stock that can compound with its earnings power or its dividend power. So, it can compound like in single digits, maybe high single digits. So it's not too bad for a very high quality name. And then I would look at buying it only if there is a bit of a dislocation at some point, like a loss in confidence, if this quality perceived at Apple wasn't there all the time. And so if you see like a weakness coming out of China or things like that, and if the stock is hurt by that, I think I would be very keen to revisit and look at getting into the name at a more attractive valuation, because when you're talking compounding, then valuation is almost everything, because that's what drives your ability to buy back your stock more efficiently and things like that. Right. So I really think you need a lower multiple to make Apple a compelling single digit compounding opportunity. And then a kind of like a breakthrough opportunity, an opportunity to increase prices, to increase significantly volume, to launch a new product. Difficult to see that on the horizon, to be honest.
Pierre, thank you for the brief. Pierre Ferragu, for some real Apple caution there, different than the fanboys that so many people speak of. As Pierre talks here, we got so much to talk about. I got like 25 seconds. Scarlett Fu, thank you.
Oh, it's been a pleasure. This? Yes, I survived. And I'm staring at the 10-year yield just plummeting right now.
Plummeting is the right word here. Neil Dutta out. He says this is productivity. He says, Neil Dutta says, it's just simply welcome news. Futures up 1%, up 41 points. For John Ferro, the Dow up 234 points. This is Bloomberg.
They're missing
Good morning.
out.